Hello and welcome to ET India in Boardroom. My name is Suresh Venkat. I will be your host for today's sessions. Today we turn our attention to the booming retail sector in India. As always, we have a whole host of brand and industry leaders and veteran moderators lined up for you. ET India in Boardroom is brought to you in partnership with Transaction Next, powered by NPCI. For those of you who missed any of our previous sessions, do log on to etboardroom.com and catch up on what you missed. But for now, let me introduce our first session. It's been a rough year for retailers and the future continues to look uncertain. Our first panel discussion is titled Retailers' Playbook for Survival. Take a look.
Yeah, welcome everyone to this wonderful panel around retail, future of retail, what the pandemic has meant to us. I think we're very, very lucky to have a set of panel members here who are esteemed and sort of done wonderfully in the pandemic and even before that. Let me take a minute or two to introduce the panel members before we get to hear their views around the topic of interest. I'd like to introduce Pratik Pota, who's the CEO and whole-time director at Jubilant Foodworks. Sangeeta Pendurkar, CEO Pantaloons at Aditya, Birla Fashion and Retail Limited. And Abhishek Ganguly, MD, Puma India. Thank you for joining us today, this evening, gentlemen and ladies. Let me start with you, Pratik. I think the big question for all of us is, and everyone sort of looks at your company with a lot of interest, a lot of home delivery happening. What has changed in the pandemic, and how have you looked at the whole change impacting consumers and your company from the outside?
No, thank you, Harsh, and good to be here. I think COVID, like it was for everybody else, came as a sudden, almost body blow, and it impacted us first quite abruptly. All our dining operations were shut completely. We weren't allowed to operate our dine-in stores, and what wasn't so well known was that 1/3 of our revenues, a little bit more, actually came from dine-in. So that revenue stream went off overnight. Every store required us to take permissions locally for it to reopen for delivery. Our consumers and our customers were very, very concerned and anxious about either going out, which for the most part they couldn't, or even getting food home. So there was an overnight change in customer behavior. There was increased anxiety, increased concern, increased restrictions. People, our own employees, physically weren't able to come to the stores. And of course, there was a concern about their own safety. We had to ensure customer safety. We had to ensure that we rolled out adequate protocols to make sure that our store teams were taking all the steps necessary for complete customer safety. And finally, of course, like everybody else, we had to move virtually overnight to working from home. So all of those dramatic and sudden changes posed a lot of challenges for us, like it did for most other companies. But I think if I look back now, and it's been a long time, it's almost a year, well, 9 months plus. Quite pleased with the way we coped with the challenges as they came our way, and the way we managed to get business back on its feet. But I'm sure we'll talk more about it as we go along.
Thank you, Pratik. I think a wonderful start as we get in. Let me move to you, Abhishek. A different industry. How did stores stack up for you? What did it mean? I think it meant a lot of difficult times for the industry, at least in fashion. But how did you see this coming? Did you see it coming, if at all? What were the big things that you had to look out for from an external environment perspective?
Well, I think the most dramatic thing of the entire pandemic and the impact on us as a business was the suddenness. And nobody expected it. And also the speed in which it impacted us, right? It was completely unprecedented. And I think it took us off gear, off guard, both professionally and personally. Lives changed. First thing that it comes to my mind about what happened was, as an organization, we've been very lucky in the Indian market to always been growing at a very, very fast pace. We came into the country pretty late vis-a-vis competition. We went ahead of competition and we had some phenomenal growth. Now, the phenomenal growth also comes with a mindset and attitude that an organization builds as its DNA. Now, this was an aggressive, assertive mindset that we as an organization had in the market. And suddenly you're having to reverse it. We were never prepared for a crisis. We were always prepared. We had a growth mindset. And so the biggest challenge that I faced was to how do you convert this growth mindset into surviving the crisis mindset? So right from financial KPIs, which we were managing, to how we need to manage cash, and that became the most important financial KPIs, taking care of people who just stumbled and unsure, ensuring that everyone kept their job and their salaries. I think these became priorities in the beginning. And I think the thing that always strikes me is that we had to change our mindset and become far more, because we always looked at growth as the most important driver for us. And that changing meant a lot of adjustments. But once we took that over, I think it was about finding our path. Thankfully, I represent a category which is growing even during the pandemic, because people are taking care of themselves, investing in themselves, and hence sports, fitness is something that they have continued to invest and now, in fact, increasing their investments. And so we have an opportunity of our market actually growing. So now we are having to just say that, okay, how do we capture this back? In the heart of everything is that we cannot today realize that we have a certain plan. We all businesses were used to an annual operating plan. That is out of bounds. That's out of gear, right? You need to relook at your business, where you are, always reevaluate business, and be flexible and nimble enough in the organization to react. I think that's the biggest takeaway that I have had.
Thank you, Abhishek. I think, and Sangeeta, I'd just like you to also reflect, while I look at the external environment, and you sort of heard Pratik talking, you heard Abhishek, there's a different scale of retail that you operate with in your company. Now, what did it mean? Did plans make sense at all? Were you expecting it? And how did you how did you see other people responding to it in the industry?
Great. Thanks, Harsha. So when I look back at the last, I think in about 10 days, it will be exactly 11 months since the pandemic first started. And if I look at the last 11 months, just experiencing it personally first, I think I see three phases of it. When it was just starting, I think it was an organization, of course, credit to my team, we saw it coming probably a week or 10 days earlier than most other people. And we took some very proactive actions in terms of enabling people to work from home, making sure, literally in a week, everybody was given laptops versus desktops, getting printers, in people's home. And we probably reacted a little bit before even the government asked us to. But when I look at the last 11 months, that's just to your question, whether we saw it coming. I don't think anybody saw it coming at all, right? None of the business continuity plans you see across organizations, nobody had called anything like this out. So, but the 11 months, I see it in three phases. There was an initial react and panic phase where we didn't know what was happening. We don't know how long it's going to be. We were all thinking of when is business going to come back? Business was down to zero. We were shutting down stores. We started talking about scenario planning, not knowing how to forecast. So I think that was a phase which was completely mired with panic and uncertainty. And I think about 4 months into this came the next phase, which I think more mentally and psychologically, it was a bit of a 6 months later, so it was a bit of a stabilized phase where we kind of understood what this meant. Stores started opening up, looking at how store operations, coming back with safety as our first criteria. Critical need to reinvent business models because the shopper wasn't coming to our stores. And therefore we needed to find innovative ways of reaching the shopper. And we'll talk a little bit more about it. And therefore strategies to manage a new business model and to define what the new model is. Cash was critical, managing for cash, which in case of retail, as you know, there are three big elements of cost. There are rentals that we pay, our inventory is another big investment, and salaries. And therefore, managing cost and liquidity became an important aspect, and thinking through that after the first 4 months of the pandemic, which I call the so-called stabilized phase. And I think where we are today is the recover phase. I think some industries are back, just about back to last year's numbers. So within retail, some of the categories, but some are still lagging behind. And here, as we get a sense of what the new normal is going to look like, rationalizing stores, assortments, categories, increasing share of certain categories, I think all those actions happen. So I think the challenges in each of these three were different, as I just called out. But overall, if I had to summarize, there were, I think, 5 challenges that I saw. One is, as I said, the need to reinvent our business model was the first one. The second was accelerating our journey in terms of digital, right? And I think while all of us were evolving in our digital journey, I think COVID just precipitated and accelerated the need, and it was a bit of a collective call. It required all stakeholders realized it instantaneously that you had to do this. So I think the second one for me was accelerating the plan for digital transformation. The third one, I think the biggest one, was on employee engagement. With remote working, how do you kind of, it required different stretches as a leader. The fourth one, personally, it was digging deep into the reservoirs of resilience and staying optimistic as a leader. I think that was a very big challenge. And finally, building new capabilities in the organization as we embraced our digital transformation. So these are the 5 challenges. Happy to dive into more, but I'll turn it back to you.
Thank you, Sangeeta. Wonderfully sort of summarized here. Pratik, coming over to you, you did mention the challenges from an external environment perspective. And we also hear of the kind of change your enterprise has done during the course of COVID. So what are some of the thoughts or some of the main things which have stayed with you, which were really big time changes that you made within the organization? Maybe it's leadership or the leadership style, or maybe it's the way you engage operationally, but 2 or 3 things which the audience would be really keen to hear from you.
So Harsha, of course, many learnings over the last 9 months, but I'd like to call out a few of them. I think the first one is that this crisis called upon us to react with agility, with a fleetness of feet that we hadn't really sort of been preparing for. So how do you create different scenarios? How do you work with inadequate data, an uncertain view of the future, but yet take calls very, very quickly? That was the first learning for us as a team, number one. Number two, how do you flex your operating model to be relevant to your customers, to your communities when required? So to give an example, when we started reopening our stores in early April, as I said earlier, dine-in was shut, but delivery was operational. But our customers were looking for more fundamental products and needs, staples, dal, chawla, atta. So we quickly did a pivot and we said our delivery ecosystem is ready. Can we use that infrastructure? Can we use our fleet to deliver staples and deliver essential products? And we tied up with a bunch of other FMCG companies to deliver, rice, wheat, milk, etc., oil, salt, chai, etc. So the second part was how do you evolve your operating model very quickly? The third thing is this was a time to take bold calls. To give an example, a couple of examples actually. The first one was we decided to shut more than 100 of our stores. Now these stores were profitable pre-COVID, but post-COVID, given the nature of the channel mix, with dine-in being shut, mall visits being sort of curtailed, these stores we saw would not be profitable over the next couple of years, even if they came back to the normal growth. So we took a call to shut 100 stores. In any retail business, shutting stores is very, very painful. It's like doing a surgery on yourself. But we took that call knowing that we would come out of this more lean, more efficient. But as we shut the 100 stores, we said that we would reopen at least one store for every store that we had shut. So we'd end the year with the same kind of network. The other bold call that we took was innovations. So we entered the packaged foods range with our brand called Chef Boss. We launched our biryani foray with the launch of Ekdam Biryani last month. Yeah. So therefore, again, how do you move fast? How do you pivot and evolve quickly? How do you take bold calls? And the fourth learning, if I may add, was on people. I think we all know this as leaders, that our employees don't come into the workplace every morning just for salaries. They come in increasingly because they're inspired by a sense of purpose, of being of value to communities. So how do you rally the troops and rally the organization towards a higher sense of purpose, towards a mission? Look, the government of India had said delivery was an essential service, yeah, in line with the frontline healthcare workers. So how do you use that to really rally the troops? And how do you, as Sangeeta was saying earlier, how do you keep the employees engaged remotely? How do you create new rituals? How do you over communicate? How do you keep your own morale up? This is like, look, leaders are known to manage crises. That's what we are here for. But typically in a crisis, the way leaders have access to more information. This was the first crisis where there was information symmetry. Everybody knew exactly the same thing. So how do you then project confidence? How do you inspire confidence? How do you remain optimistic, knowing as much or as little as everybody else? So for us as leaders, it called us to dig into very, very deep reservoirs of strength and to stay optimistic, stay positive, stay energized, and to transmit that energy remotely and virtually over Zoom calls to the larger organization. So many, many learnings. And look, for us, we are in discretionary category, and we knew that the recovery would be a little slower than it would be for other business which were into staples, into essentials, or into healthcare. But really pleased that as we speak today, we have recovered all of our revenues of last year. We declared our results, and we are back to growth. We are more profitable than last year. So with revenues being just equal to last year's revenues, our margin profile has improved significantly. We are adding many more stores now. We added 50 stores last quarter, the highest ever in our history for Domino's. And we are now shifting the narrative absolutely clearly from recovery to growth, and not just ordinary incremental growth. We believe we are in for a period of hyper growth. So I think the worst is behind us, and we are a lot more optimistic about the future.
Thank you, Pratik. Thank you for the wonderful set of examples, and thank you for the leadership examples too. As I move to Abhishek, Pratik, maybe you can just check your internet because you're sort of wavering at times. While we move to Abhishek and come back to you, it sort of distorts at times at your end. Maybe you can look at that while we come back to you. Abhishek, I think this wonderful set of examples, as you said, and sort of you were always in the growth mode, I would say. A little bit of break sort of was applied during the initial few months, I guess. What were some of the examples that you had, or some of the leadership? Where did you have to actually take strong leadership calls and difficult calls in a time where perhaps stores may have been shut or business may not have been as strong as what you were expected?
So the biggest leadership call is, I think I will take from what Pratik said, was around people. So the true character of a leader, I firmly believe, is when you have a crisis of this magnitude, right? Because for us, for me, it was about, if today there are about directly and indirectly 6,000 people whose livelihood is, who direct earning and livelihood of them and their families is depending on our business in India, and they have got us to where we have, how do we ensure that they are protected? So, and prioritize that over everything else. Also, the very fact that even when the unlocking happened, whether it was our warehouses, whether it was the factories who make products for us, or our retail stores. These are the people who stepped out of their houses when a lot of us continue to work from home. And they also have elderly parents and younger kids. So having that empathy, I think empathy in leadership uh, was never as important as during the crisis. And now I hope that stays with a lot of us. So I think having that empathy of what people go through. So we had to do a lot of things in terms of, we did a lot of things. First and foremost, we did not let people go. And this is at every level. We didn't let even services like, housekeeping, security at stores, or we ensured that everyone stayed afloat with us, even if stores were closed. They did not have to take salary breaks, and we prioritized that as the most important thing. We increased medical insurance for the family members, as well as people, especially for those who were outside their houses. So we did a lot of things. So I feel that these are the people who got us here, and these are the people who will take us to hopefully the hyper growth that we will also see. And I think that was my biggest focus point. The second thing is that you need to reoperate the business, imagine the business in which how you reach to the consumer, and for that requires dynamism in the supply chain, rehauling of the supply chain, rehauling of ways to go to market, which we did. Digital has been a journey that Puma has been for a while now. So thankfully that helped. And I'm not talking just of e-commerce, where we are substantially leveraged, but I'm also talking about our approach to digital, our approach to reaching out to our consumers through digital media, social media. So all of these things help. But net, I think the takeaways were people, nimble and dynamic attitude. And the third is that you don't overcommit to a plan. Gone are the days when you say, okay, focus on this thing on your business. It is about reevaluating and reimagining business, which has become very, very important. And we are also extremely bullish. We're seeing tailwinds coming back. We also firmly believe that for every pizza that Pratik is selling, people are running 5 kilometers and buying the right gear for that. So we are also seeing that happening, and we are very, very extremely positive. I think India has been able to manage so far. Fingers crossed. Have been able to manage the crisis much better over the last couple of months. We're seeing that back in business. There is a positivity with the budget coming in. So I think overall, fingers crossed, we will be out of this and we will emerge stronger, and we will all be better business professionals.
Abhishek, thank you. I'll always remember that example around Pratik selling more pizzas and people running that much more. I sort of reflected to Sangeeta in terms of what it means for her side of the business.
Hopefully they'll wear the right clothes.
Yes. So Sangeeta, over to you. I think it's a very nice point, which I think even Abhishek made in terms of people, leadership, empathy. Yeah. So I'll be keen to get your views on this, and also I think as Pratik mentioned, any examples which have been very close to your heart,
Sure.
Which would be good to share here.
Sure. So I think in terms of how we addressed our challenges, I'll split it in two parts. One is in terms of how did we address the people and the leadership challenges? And the second is in terms of what did we do in terms of business and how we reinvented our business. And I think some great examples from both Pratik and Abhishek. Personally, I feel again that, this crisis actually tested organizational character and leadership to the hilt, right, for all of us. And when you think back where we were, 10 months ago and even 7 months ago, I think it was a real test for everybody. At an organizational level, and remember this crisis, when you look at it, the world has faced other crises, right? There have been economic downturns and There have been, natural disasters and calamities. But this is very different because this really had it had uncertainty linked to it. We didn't know. It's not like an earthquake that lasted for a few minutes or a few days at best, but we didn't know when this was going to end. And I think that was a defining character of this crisis versus some of the others, which made it even more difficult. So there's a health risk, there's a life risk, and there is uncertainty. So we didn't know how far this is going to go. And you just had to, as I said earlier, portray yourself as an optimistic leader, but take actions that provided reassurance to people first on their safety and life. And I think that was our first point of focus. And, both at ABFR level and the Aditya Birla group level, I think that was defined as a very, very imperative agenda and a critical agenda. So I think safety of people, the kind of protocols we put in place, and our store staff, like Abhishek said, the store staff and the warehouse staff were the first ones to come back. What kind of protocols you need to put in place to help them feel safe, because at the end of it, they're taking a risk just trying to do their jobs and coming to their workplaces versus some of the other functions who had the option of working from home. These functions had to be at their workplaces. So I think safety first was the biggest agenda. Also with that, I think some great examples of the healthcare support that was set up in terms of attachment to hospitals, in terms of reaching out to people. I mean, lots of people have lost their near and dear ones in this, as all of us would have experienced. So I think providing that medical infrastructure support and safety protocols was one part of it. But I think the larger part of it was on employee engagement. And in terms of how do you find new ways to engage people, right? Because it was a new way of working. We all lost an intuitive feel to a workplace, and we lost face-to-face interactions. And I think two things that really worked for me. One is how I thought as a leader I needed to be. And at the same time, there is a lot of work happening. We were working, 9 to 9 every single day during those few months, and it continues because there was just so much to sort out. Besides providing reassurance and confidence, I think a lot of it was also about engaging with people both at a personal level, having some no agenda calls while you're doing these meetings, just checking in on people. I think even off late in the last 3 months, because a lot of people have come out of it and are now coming back to office, just 2-hour sessions with 10 people digitally over a cup of coffee, asking them what their experiences were, what they went through, sharing it with people. I think just in terms of building that connection with people, I think has really helped me stay close to people and stay connected to people. And overall, as a leadership tenet, Abhishek alluded to it, I think empathy was a great one. Now, we know empathy always forms a very, very important aspect of EQ. But here, empathy was, of course, it needs to be authentic, but you're navigating through uncertainty. People are stressed because of the problems, and they have work to do. You just needed to find that right balance of being directive and yet being inclusive. And finding those different ways of being inclusive with people, I think, is just something that I had to kind of find time and again. And with this work-life balance to work-life integration, that shift, helping people with that. So putting a set of policies, no calls after 7, additional pressure at home, how do people kind of, making sure that there are adequate breaks, and how do you create some sort of a separation between your desk and a meeting, which you could do at office. I think helping people with that and helping them adjust better, I think, are some of the actions that help us. But as a leader, I think empathy stood out for me as the big one. And the second one I would call out is agility. And that's a good segue into the second part that I said. We had to take some actions on the business very, very quickly, literally on the fly. we had to anticipate and rethink the customer journeys, which have all got disrupted. And that, I think, was the fundamental issue. We were on a journey as far as digital transformation is concerned, but we had to accelerate a lot of things which we were going to do in the next financial year, came to fruition actually 6 months back, which is, I think, again, a fantastic speed that teams have demonstrated. So without really having any sort of dashboard or knowing where you're going into the future, but having a good sense of intuition and judgment, and taking some risks, I think was very important. So new models, new ways of reaching the consumer, the go-to-market, whether it was setting up temporary pantaloon stores inside buildings and societies, whether it was a pantaloon store in a mobile van going across different buildings, or very quickly adapting and moving to our omni-channel model, which was supposed to be launched in February. We actually launched it way back in July, working through it from April to June. I think that's, again, a great example. Today, 200 plus stores of ours are connected in terms of omni-channel. Or whether it was social commerce. Today, a shopper can call any of our stores, have a virtual tour of the store, choose the clothes he or she wants. So how do you reskill people? Initially, people were sending catalogs. How do you even shoot the right set of pictures in a store? What's the right lighting? So upskilling people there was a huge task for digital fluency, right? So a lot of that, but those actions happened after the first phase of the first 3-4 months were over. They happened with very, very rapid kind of speed. And I think that's the other thing for me, that it was always possible to do this, but we were trying to do it in the normal course of things. COVID has taught us that you can do things otherwise.
Sangeeta, thank you. Your leadership examples, really big learnings for all of us coming in the COVID. So thanks a lot for sharing these ones with us. Pratik, as I come back to you, what are some of the things which you're putting into place for the long term to be much more sustainable, to be much more robust for the longer term? Are there things on the people side, or how people work, some basic rules, tenets in place, so that as we go forward, let's say next 2-3 years, we have a much more smoother ride given what we will be facing?
I think just like COVID was a huge temporary headwind for all of us and for our category as well, I believe equally it will be an even bigger tailwind for us in the longer term. This is an inflection point that we've all sort of encountered. And I think what lies ahead is a structural transformation of multiple categories. In our category, for example, it will mean a much faster growth of the organized sector. More than 2/3 of the restaurant industry is unorganized. Their share will shrink. We will see a larger share of the organized sector. Within that, a much faster growth for brands that are trusted, credible. Consumers will navigate choice making more by trust than by promotions and discounts. We will see a much greater omni-channel behavior. This business was entirely dine-in driven or largely dine-in driven. That will change, and that's already changed dine-in, delivery, and now takeaway. Digital means of ordering, and that will obviously increase and that will sustain. So we are seeing a structural shift happen, and I think, as all of us know, what COVID has done is that it's compressed 4 or 5 years of change over 6 months. Yeah, and we've encountered that as well. Now, fortunately for us as a business, I think we had sort of anticipated many of these trends without, of course, knowing about COVID, but our strategy was in a similar direction. So we had made some fundamental investments in technology, in digital, in driving omni-channel, which have stood us in good stead in the last 9 months. As we look at the next 3-4 years, the huge drivers of growth for us are going to be just sort of embracing omni-channel even more. We have a very strong delivery ecosystem. We need to strengthen that. We need to complement that with a strong foray into takeaway. Takeaway as a channel had low relevance in the Indian market pre-COVID. Post-COVID is the fastest growing channel. because it gives consumers the best of both worlds. The freedom of the outdoors, the freedom of being able to go out and get a controlled experience, and therefore the safety that comes along with it. So takeaway is growing. Dine-in as a channel right now is capacity constrained. We have by law only a 50% capacity allowed. That will get relaxed over time. So dine-in will come back. So really driving omni-channel and using technology and contactless ways in all of these channels. So we just launched something called Drive and Pick as part of a takeaway offering, which essentially simulates a drive-through experience, which we see overseas. Now in India, most assets are not friendly towards drive-through, so that requires very large, expansive real estate that's not available in India. But how do you still simulate a drive-through experience with a conventional store format? And we can do that digitally. So we've launched that, and that's doing very well. So that's an example of how we drive an omni-channel experience. Digital, of course, we were early investors in digital. The Domino's app right now is typically the #1 rated app ahead of the aggregator apps, which are more celebrated and more widely known. But we've had a good run. We've had a record number of app installs and downloads. We've invested aggressively in performance marketing. Now, most consumer brands invest in social media and invest in traditional marketing, not so much in performance marketing. For the last 3 years, we've learned the ropes on performance as well, and really driven our app downloads, and our monthly active users have been the highest ever during COVID, and that number is increasing every month. So how do we really strengthen our digital infrastructure and digital assets? And what we've got, I'd like to believe, is just pawn to king 4 on the chessboard right now. We've got many more plans lined up ahead of us. And of course, the challenge here is to remember that consumers don't benchmark us vis-a-vis our traditional competitors, but they benchmark us vis-a-vis an Amazon or an Uber. So the customer benchmark has moved vis-a-vis, in terms of experience. So we have to measure up with maybe 1/3 or 1/10 of the resources. Yes, that's the other bit. The third area, of course, is that our category, the food category, of course, is a category of variety, of choice, of multiplicity. And just like we have a very strong pizza brand, how do we leverage on those capabilities and those strengths to build out an even more or as powerful a portfolio on other cuisines? So the biryani brand that we launched, Ekdam, early days showing promise. How do we build that? We've got a Chinese foray going with Hong's Kitchen. Again, a year and a half into the market. Some learnings. How do we scale that up? Chef Boss as a brand, very exciting. How do we scale that up? And of course, how do we use our assets to really unbundle and to sort of uncouple the strengths that we have, digital, delivery, supply chain, and how can we monetize them and make them grow much faster? And we also have a fledgling international business. And our objective is to double down on international as well, in Bangladesh, in Sri Lanka, potentially in Nepal and other countries. And how do we make these markets grow? So I'd say the structural changes that we are seeing, organized sector, trusted brands, digital, omni-channel, all in a manner of speaking play to our strengths. And we'd like to believe that though we didn't know about the crisis, I think we are well prepared to deal with the changes that have come our way. And I think the future is very, very exciting. And like I said earlier, I think this is a period of potentially hyper growth. So looking forward to that.
Pratik, thanks a lot. We all have your app, and we wish you all the amount of growth that you can get as you go forward.
Order, Harsh, order. Don't just have the app.
We do order. And I must compliment, I think, even the service when we have a complaint. So I think, to be honest, the speed at which the response happens whenever something does not happen in place is something to be complimented at your end. I must say that. Abhishek, to you, Pratik mentioned omni-channel, digital, a few innovations, similar themes at your end as you go forward and re-engineer, recast the future, or you see something else which may be accretive here?
And I think for us, digital and approaching things more using technology has been something that we have been doing for the last 3-4 years, very consciously seeing the future. So we have been that ways in our operations, being very futuristic. And that has really helped, like I mentioned. But I think it is about, sometimes the word digital transformation, it worries me because it's not just transformation to something else. It's a constant evolution through digital. And I think that's something that we've all realized. So the pandemic got forth market factors, consumer trends, where we have to evolve and recast, like you mentioned. So there are elements of our business that we are using to redraw and recourse ourselves, and using technology not just in terms of the way we are approaching the consumer, but also in our business. How can we using data? How are we becoming more process oriented? How are we using automation and tools around that? So this is very, very interesting. And I think overall, I would also like to build a very positive sentiment that we are seeing the outlook is very, very positive. I think the very fact that businesses have shown this kind of resilience, consumers have shown this kind of resilience, and it is very clear that humankind cannot be held back, irrespective of the enormity of a problem. I think it shows a lot for human race itself, right? I mean, what we see in India is just incredible, right? And I hope that, with solutions around better medical understanding of the virus, as well as with vaccine, I think we will also get supported in this positivity. So I, for one, am extremely optimistic, just like Pratik mentioned, very, very optimistic. And we will go in the business that would reflect in the way we are approaching the market and the aggression that we show in the market.
Abhishek, thank you so much, and so heartening to hear about the optimism. Wish you all the best too. Sangeeta, coming over to you, and as we look at, I would say, the last round and a summarize post you, any closing thoughts, anything from your side on future of work, how it's changed life for people? Yeah, over to you.
Yeah, sure. So I think both the future of retail and the future of work is likely to change drastically. It has changed to some extent, but I think it will continue to evolve. And I think as retailers, we need to, physical retail is here to stay. And, it's not that everything is going to transform to, to a completely online business. And remember, especially in case of fashion apparel, where people want to touch and feel the product, people want to try the product, and people want advice on the product. Visit to the retail stores will stay, and it's an integral part of people's life. A day out in retail, as people call it, retail therapy. So it's not something, once people feel safe and reassured, and once we feel that the virus is more under control and we have more certainty, people I think will come out. But having said that, I think the future of retail is likely to look very different. And as I said, we will see multiple customer journeys, and therefore the evolution in the role of stores from entry once and a single use kind of a premise to really a multi-use, a click and collect, a delivery point, an experiential center. All of that will happen, and therefore the way we will kind of develop our stores and keep stores and make decisions on stores, I think would look different in the future. Equally, to your point on future of work, we are seeing already it has taught us how we placed and perhaps an undue importance on doing everything face to face. I hear so many friends and people say, "Oh, I don't know why I was traveling so much all these years. Today I can do the same thing digitally." I think that bit about adapting digital, both from a shopper standpoint, from a consumer standpoint, personal space, I think has taught us new ways of working. And I think working solutions will become more hybrid as we move on. And I don't think there will be one or the other model where people will give up office spaces completely, but people may shrink spaces. There are some companies, some sectors who can operate completely out of home. But I think it will require, greater learning in terms of remote leadership, as I call it. And it will require us to build those muscles. Both for this, I think this short period, an intense period of 10 months, which has been a fantastic lesson for all of us, has allowed us to build muscles and to think about 5 or 6 different things, which if you keep in the context of future of retail and future of work, One is in terms of, enough has been said by both Pratik and Abhishek on the digital transformation. But the one point I'd like to make there is, I think increasingly organizations will have to build digital ecosystems. And you will have to look at partnerships, you've seen the Flipkart Myntra partnership with Aditya Birla Fashion and Retail. And obviously, it allows us to build new capabilities as we move forward. So we'll have to create those ecosystems. Second, the importance of agile supply chains. Quickly, the way we pivoted around athleisure when people were wearing comfort wear. How do you really create inventory for a completely new category? Or the second business that I run is Jaipur, which is a completely online business. Our world moved to home, right? It's fitness at home, it's study at home, it is, enjoy at home with the immediate family members. The world shifted inside the four walls of our home. So therefore, home is a category. We quickly launched that. So relevance of new categories and therefore requirement of agile supply chains, I think is the second one. I think teams of the future will look different, both in retail and in offices. So redefining roles of the teams and therefore what kind of talent you need. The fourth one, I think cost. It taught us once again the discipline of zero-based costing and trying to strip away costs from your value chain in terms of non-value added activities. We did that, I think, quite successfully. Fifth, as I said, is a new set of capabilities that you will need for the future. Data being a very, very important one, analytics being an important one. And last, I think, is a different culture that you will need to build, and therefore different kind of leadership.
Agita, thank you, and thanks a lot for even stressing on the culture aspect. Very important as you sort of look through to scale and look forward to the future. Well, Sangeeta, Pratik, Abhishek, thanks a lot for being such wonderful panel members. I've learned a lot today. I've also learned that when Pratik sells more pizzas, Abhishek sort of sells more shoes, and Sangeeta will sell more apparel. That's a big learning for me. I'm sure the audience has enjoyed this. Thanks to the ET team. Have a wonderful day to everyone. Thanks once again.
Thank you, Ashwin.
Thank you, ET. Thank you for having us.
Thank you.
Thank you.
Thank you.
Technology has played a huge role in the evolution of retail. Today, we stand at the cusp of the next big retail tech revolution. In our next session, our panel of experts discuss why embracing innovation has become crucial in the retail sector. They also talk about technologies like AI, machine learning, social commerce, and contactless commerce. The session is called Scoring High on Tech-Based Experiential Retail.
Welcome everyone to this panel discussion around how to score high on a tech-based experience retail. I think we have a great group of panel members here, well accomplished in their own fields, and I'm sure you're going to enjoy the session as I would also. I want to take this opportunity to introduce our panel members to you. Hari Vasudev, Country Head and SVP Technology, Walmart.
Thank you.
Raghu Krishnananda, CTO, Myntra. Nitin Chabbra, CEO, Ace Turtle. Well, gentlemen, thank you so much for joining us today. Let me start off with you, Hari. The last 10 months or 9 to 10 months have had a huge change in the way in which we as consumers have behaved, and tech firms have also sort of reacted to it. What are the big challenges that you see in your role in terms of how retail is changing and how experience-based retail may be becoming more relevant?
Yeah, I think, Harsha, as you rightly pointed out, right, there's been a dramatic change in consumer behavior. Obviously, because of the pandemic and due to various lockdowns imposed across different countries, the entire shopping experience to a large extent has changed quite a bit. Right? And for us at Walmart, it was no different. We saw a lot of our consumers switch predominantly to an online way of shopping. And more shopping has become what we call omni-channel, meaning that more and more customers have shifted away from walking into the stores and they're doing their shopping mostly online. But at the same time, in many cases, it's not purely online anymore either. What they're doing is they're ordering online. They want things to be delivered home. In many cases, because it's for daily use items, they want it much faster. And so we have actually had to repurpose our existing stores to be able to ship from the stores to consumer homes. They want facilities such as being able to not go into the store, but just drive to the store and have things be brought out to the parking lot to their vehicles, or to do curbside pickup. They want to be able to return items that were delivered to them at home without having to go through the trouble of packaging it up and then going to a FedEx or a UPS or whatever, but rather just drop it off at the nearest Walmart store. So more and more, there's just a few examples that I called out, right? But fundamentally, we expect that the omnichannel way of shopping is going to not only continue but accelerate, right? And the implications, therefore, for retailers is that they no longer have to think about it as online or offline, but really think about creating shopping experiences for customers when they want it, where they want it, how they want it, and how therefore should they be thinking about technology, about bringing in technology to bear so that you're able to create these very frictionless, very seamless shopping experiences.
Yeah, thanks, Hari. And Raghu, let me come to you. Obviously, Myntra, the fashion capital, as I would say, you would have had hopefully a different experience from what typically the Walmart merchandise would be. And fashion did, some categories have done, I'm sure, very well. Some categories have sort of not been able to. So some insights from you, in terms of how you saw the market shaping up. And then specifically with regard to Myntra itself.
Yeah, I would say the general trend has been pretty much similar to what Hari mentioned. So we certainly see a big shift in the consumer behavior towards online, and fashion industry is again no different. So the other trend that we see is like more and more shoppers coming in from tier 2, tier 3 cities, right? So the first time shoppers onto an e-commerce platform. So that's been another trend that we see. So this poses certain interesting challenges. So one is for the offline retailers. How do we get online, right? So this, traditionally this has involved, huge investments in technology, expertise, and so on. So this is where like the whole omni-channel aspect comes in a lot, becomes very, very important, right? So the consumers, we need to give the power in the hands of the consumers, where it is they who decide where they start their shopping journey and where they want to end it, right? So so that becomes imperative for offline. For online players such as Myntra, so the challenge here is on both sides. So how do we make sure that we address the need states of the new to commerce shoppers, especially the T2, T3 customers, and then how do we try to recreate some of the offline experiences online, right? So this could be things such as how do you kind of gain the trust of the consumer? So so the consumer is used to seeing, feeling, touching the product and then buying it online in real time. So how do we try to recreate some of those experiences? How do we address the language issues, right? And then there is shopping offline has the instant gratification. So how do we improve the speed aspect, for the online transactions or online shopping? So various aspects that we need to consider from an online player perspective.
Thank you, Raghu. Excellent to hear your thinking here. Nitin, you've sort of seen various firms in the marketplace, and of course they'll be large and organized, and some of them could be lesser organized. How do you see the trend? Do you see a difference in terms of how they've perceived things? How is it looking to you?
No, yeah, because we are different from the way, Hari and Raghu's organizations operate. We are enablers and we supply technology to large enterprises. And what I would say is that, pre-COVID, few brands had, gone down that path. But for a lot of them, we would get called before their board meetings. We were a boardroom discussion. And then post-pandemic, it actually became a reality. During pandemic, it became a reality. And the reality is, if you look at most of the industries in India, which were, still the pace of innovation was faster, retail was slow to adopt technology. And cracks, had started appearing in retail even before COVID. Because I mean, all of us, have been, associated with retail one way or the other. So retail had become very transactional, very non-personalized, and it was not experiential at all. It was lacking a lot of experience, which you would, as a consumer, would want retail to be. It had become very boring. If I just want to put it in a simple way, and what pandemic essentially did, that it acted as an accelerant of all these issues, which became even much profound. So as a result, suddenly everybody wanted to jump onto this. And I can share a stat with you. So we grew before pandemic to, if you look at it now, we grew 4.2x times, right? So for us, it was all about managing that scale, and of course, everybody wanted to go live the next day, right? And so we had those sets of challenges to say, okay, how do we make sure as many clients as possible go live as fast as possible? Because this was largely dependent on, for a lot of them, on their cash flow, because everything else was shut around them. And I think for us, it turned out to be a fantastic accelerant, for the business.
Nitin, thank you. Wonderful to hear that. Hari, coming back to you, as you painted a picture of the consumer and the tech landscape, what were some of the things that you as Walmart had to keep in mind, or perhaps some of the things which really sort of caught your eye when you implemented them? And if you could share a few nuggets there.
Yeah, I think, one thing I wanted to add, which I was just reminded of, as Raghu and Nitin were talking about, is one part of it is obviously external facing, right? Meaning, what are we doing with the consumer as consumer behavior is changing? And another part for us, particularly given how globally distributed we are in this, the large workforce that we have, there was a lot of focus and emphasis on how do we enable our own associates to collaborate better, to really do things to meet the increasing consumer demand, whilst actually going to a whole new way of working, right? Largely working from home. All of our meetings are obviously, like everyone else, on Zoom. So for us, really, when one of the key things we had to keep in mind as we really put forth new experiences for our customers and consumers during the pandemic was really how do we balance also the need to keep our own associates very safe, keep their health and well-being uppermost in our minds, right? I'll give you a couple of examples. One example was, I talked about how we put in place a mechanism to do much faster delivery of daily use items, right? Like hand sanitizers and masks and toilet paper and what have you. And so one of the things that we found out very quickly is that both for our customers as well as for our own associates, for the safety, they didn't want to be coming in contact with each other, right? So even when you go and deliver something at home, we introduced something called contactless delivery, which is the idea is that customers, when they order things in the app, would decide that to opt for contactless delivery. And what this typically meant is that the associates who did the actual delivery, the drivers, were given notification that they should not try and attempt an in-person delivery, where they're handing the items to the customer, but rather just leave it at the doorstep and ring the bell and walk away. And these were specific instructions that were given to the drivers through the app that they use. But then, of course, you also wanted to make sure that, we didn't have any issues with customer experience where someone leaves something on your porch or your front door, you come out later, open it up and something is missing. And, maybe either someone forgot to put it in there in the first place, or it's a potential for fraud and so on, right? So what we had the drivers do is actually take a picture and upload it back to our backend. We would then do a quick scan and compare, and then we would notify the customer saying that, your item is available. You can open the door and pick it up whenever you want. So if you think about it, it's a very simple concept, right? To be able to say that I can just do contactless delivery, but to be able to now actually do it at scale and to roll it out across our entire customer base and through our entire associate population who are out doing deliveries every day was obviously no mean task, right? Likewise, in the case of pharmacy, because access to pharmaceutical goods and customers were, especially in the early days of the pandemic, they were trying out many different medications and medicines and so on. There was always a worry that there would be panic buying. And so in many states in the US, they had imposed, just like in India, various kinds of caps on pricing of pharmacies to make sure that retailers are not engaging in, price gouging, right? To put it very simply. And so we had to then make sure that we would actually have all of the associated software. We should keep appropriate records, make sure that we are actually tallying prices. We're keeping track of everything, both as a way to ensure that we're being fully compliant and we're ensuring that we're being extremely equitable with respect to our customers, but also as and when the government came back and wanted to look at those records, they would be available, right? So these are just simple examples that we had to do very quickly and at very large scale. Right? At our scale, nothing is simple. When you have 200, 300 million touch points with customers every week, spread across 11,000 stores across the globe, the whole variety of things to keep in mind, because even though we are a conglomerate, every store operates within its own local environment. It's very much a part of the community that it's in. And so many a times, these things often have to also be tailored to suit local needs, local regulation, local compliance requirements, and so on. So those are just some examples of where, as associates, we had to come together while working remotely. Another simple example, just to round out, is, as Raghu can attest, we have these massive spikes during a holiday season, right? Just like Myntra does with its end of season sale. We have a similar thing where, during Thanksgiving, Cyber Monday, Black Friday, we see a massive spike in volumes, right? Now, normally during this time, it's all hands on deck. Everybody is actually across all of our locations. People are going into a network operations center. They are tracking every aspect of every system on a continuous basis. But of course, there was no possibility for us to actually congregate in the office to get into a network operations center or a common location. And everything had to be done through Zoom, right? So just ensuring that core infrastructure that we use can scale for our needs globally is highly available. Simple things like access to VPN is continuously available, that people can actually get on a conference call or a Zoom meeting very quickly and troubleshoot things while still working remotely and virtually was another important aspect for us. And it's a huge call out on the hard work of all of our associates that we had a spectacular holiday season that was flawless from the customer's perspective, while still keeping all of our associates and everyone across the globe safe and healthy at the same time.
Hari, thank you. Very simplistically and nicely put from your side. Super examples. Nitin, let me come to you before I go to Raghu. What are some of the examples you saw? I would say, let's say the smaller order firm which you were trying to enable, which could be interesting to the audience.
Yeah, so I think one challenge which we definitely faced and was interesting was, for us, it's very important to get a single view of inventory. And we need, a picture which is as close to real time as possible, because we move, inventory seamlessly from where the demand is getting generated, right? So the demand could come from one channel, it moves to other channels. So there were two challenges which we faced. One was, I would say that, one is the legacy system, which is understandable, right? Because no one was predicting pandemic, and this happened too soon and too quickly for everybody to react. But that was expected. The second, I would say, was largely on the legacy organization structure, or maybe legacy not the right word. I would say the traditional organization structure, how brands or retail was organized. So typically, if you look at from a brand perspective, how it's a very siloed organization. So they would have a retail team, and they would have a wholesale team. Then they would have a departmental store team, and then now they had an e-commerce team as well. And each of these teams operate in silos. And essentially, where we come in and what Holding Channel is all about, that demand will get generated in one channel and you're fulfilling from some other channel. So I think these were some of the challenges which the CEOs had to figure out on the organization structures, etc. So I think so that was something very interesting for us to figure out. And we during this time we were fortunate. We were working already on a product which was around mobile checkouts. And when this happened, we quickly I would say pivoted that to a more of a contactless commerce piece. Because we realized that the customers now even they want to be safe, like Hari was mentioning, even the store associates, the delivery associates wanted to be safe. So I think that product helped us where the entire journey. So what we did was we brought in the nearby store to the customer itself, and they could actually see that on their own on WhatsApp. So the discovery was happening online, the transaction was happening online, and there were some interesting learnings also there, because typically, when you're enabling a web shop, your thing is you want to show, a large catalog, and there is a typical way, a customer goes through the funnel. But in case of WhatsApp, we realized that, the journey was very different. On WhatsApp, customer wanted to do everything very fast. So which essentially means you had to be very personalized, a very curated catalog you want to show him, so that his discovery is quicker and he just, you push him down to the funnel faster, and the transaction also happens quickly. So I think interesting times. And what I'm glad about is that a lot of these things now are getting accelerated from a lot of the brands now. So a lot of them are now driving these, I would say, initiatives down to the wire in a much, I would say, a faster manner than it was happening pre-COVID.
Nitin, thank you so much, especially the WhatsApp example, again, a very, very relevant one as we look to scale. Raghu, certainly I'm sure you had equally interesting experiences or learnings in the pandemic, especially with a different category totally. I'm sure the audience will be really keen to hear some examples from you too.
Sure, yeah. So the first thing again was similar to what Hari and Nitin said. Focus on employee safety and customer safety. That was our first thing that we did. So for the customer safety, the whole contactless payments, contactless delivery, showing the temperatures of the delivery agents to reassure customers, things. On the employee side, yeah, so within our warehouses, the social distancing and all the other norms that we follow. And of course, all of us work from home. So we had 3 big events last year. And all of these were handled remotely and successfully. So yeah, so I think pretty much all companies have adapted really well to this whole virtual way of working, right? So that was on the what we did on the employee and customer side. On the product side, a couple of things that we did. One is the omni-channel thing that we talked about. We really expanded, doubled down big time on that. So we now have about 1,800 stores on the Myntra omni-channel network. 200 brands, right, across like 20 cities. So that's something that we've really expanded. This helped our brand partners, sellers tremendously when there was really like less or almost no footfalls in the stores. They were still able to sell merchandise through Myntra. So that's one thing that we did. We also rolled out a few interesting features. One is called, which is a studio, right? So which is basically our video and content platform. So what we saw is like customers are looking for inspiration to buy fashion. So now that is missing where they go to the stores. So how do we kind of try to recreate some of that? So we have a lot of fashion influencers in the country signed up on our studio platform. So where they actually showcase some of the products, on the platform, right? So this is through like articles, through images and videos, and whatever that they show is actually something shoppable on Myntra. So that way there's a direct connect, to what what the customer is seeing. So this has been pretty successful. So we see a lot of repeat users. In fact, 65% repeat users coming on to Studio. So they're pretty engaged with the platform. So these are a couple of things that we did. We also doubled down on adding more games. So we have some games which are kind of relevant to shopping and so on our platform. So this is to keep the customer engaged. So some fitness related stuff. So encourage fitness, how they can do some of those activities, and those step counts add to the points, loyalty points, which you can then redeem on Myntra. So these are some of the things that we actually did during the pandemic and right after.
Raghu, thanks a lot. Really liked your examples towards the end, especially around how you kept the consumer engaged. So wonderful ones. Thank you. Hari, back to you. The question now is about, as we look forward and as we look back, I don't think any of us expected this kind of a pandemic to hit us. And of course, all of us, you've given wonderful examples as to how you upgraded, got to speed, technology became much more relevant, experience became much more relevant. But if you look, let's say over the next 5 years, 7 years, what do you think are things that you've tried to put in place which are more long-term? Because everything will not have an immediate. So anything which you're putting in place, which let's say over the next 5-7 years will be good foundations and should be adopted by other people in terms of us thinking construct, I would say.
So I think obviously, like many other retailers and other companies in general, right? For us also, there's a huge focus on using data better. and particularly at our scale, the use of data to create better experiences for our customers, to be able to allow better and more efficient decision making within the enterprise itself, right? I mean, we have more associates working for us than many companies have customers, right? We have 2 million people across the globe working for us. And how do we create even enterprise level systems that can actually take care of those associates in the most effective, efficient way and ensure that they're being as productive? So we employ data pretty effectively across the organization to make what we call data-driven decision making, right? And that will allow us to not only bend the cost curve within technology, which then can be passed on to the consumers through price breaks, but it will also allow us to bend the cost curve for the rest of the enterprise so that every action within the enterprise is that much more productive, that much more efficient. The second thing that we're doing, right, is really around associated with the use of data. There's a lot of concern, obviously, around how do these algorithms really work, right? And how do we ensure that there is an appropriate level of transparency, fairness in the algorithms, that they are equitable in nature and they're not increasing disparity, but are used to close disparity as much as possible, right? So we're starting to think about that. It's very early days, obviously. And then, of course, from an AI and ML perspective, we are employing AI and ML today across every part of our enterprise, whether it is in creating experiences for our customers, whether it is in the supply chain, and I'll talk a little bit about some of the examples there, or whether it's in store operations or in the way we interact with the suppliers and our partners and the marketplace sellers. A couple of quick examples, right? So in our online grocery experience, typical way it works is that you order groceries online, and then we have associates in the store who pick the groceries, have it be ready in the back room. And then when you drive in through geo detection, we know that you're there. The associate will bring your order outside, load up the trunk of your car, and you're off and on your way, right? So the entire thing will take less than 2 to 3 minutes from the time you drive into the parking lot to the time you leave. And of course, the challenge is that many times, as the associates are going around the store picking the items in your order, there is a challenge that sometimes we're out of stock, right, on a particular item. It doesn't happen very often, but sometimes it does happen. And when that happens, the question is, okay, how do we react to that? Right? We can either just say, okay, we are not going to fulfill that item. But of course, that means that you as a consumer have to now make, you have to now figure out how to get that particular item, right? The second is we can call you and say, hey, this item is out of stock. Can we substitute? That's obviously a huge disturbance for you because we're going to call you each time we run out of something, or even maybe we are not able to get in touch with you because you're busy, you're in a meeting or something. So we have something called smart substitution. And the idea is very simple, right? We use all the data that we have about not just you, but also about the affinity of other customers who have shopped for similar things. And what are the other brands in that particular category or particular item that have a high degree of affinity, but also are close in terms of price, right? Because we don't want to always substitute something with a cheaper item, because then you will think that we're trying to actually skim money off of your order. And so we have various techniques that we employ, and we have created essentially a mechanism to be able to finally arrive at what is the best substitute for you as a customer personally at your level for this particular item. And then we make a substitution. And the good news is that, we have seen a very, very high level of uptake on that, because what we do is we substitute. When the associate goes out to deliver the order into the parking lot, he informs the customer saying that, these particular items are not available in your order, and we have substituted them with these other items. And at that point, the customer has the option of saying, okay, no, I don't want the substitution. And, in this case, we will just refund them the appropriate money. What we have seen is a very, very high level of acceptance of the substitutions, right, which indicates that our algorithms are learning and working and getting better and better. Another example is around IoT. Obviously, we all are familiar with the concept of IoT, and we have these devices that are now getting ubiquitous across the supply chain, across the stores. And they're generating massive volumes of data, right? And we use data being generated by these IoT devices in our stores to actually start to figure out how best to optimize energy consumption in the store, right? So how can we actually ensure that, the temperature is maintained absolutely at the right level in our freezers. If the temperature has to go up or down too much, how do we take preventive action so that goods don't spoil? At the same time, ensuring that we are optimizing for energy consumption, because obviously at our scale, again, sustainability is a very important area of focus for us. We not only want to get to carbon neutrality, but we actually want to be regenerative with the environment. And we have announced several measures in that regard. And we're starting to employ technology through IoT devices in our stores, in our supply chain, but also doing, after the fact analytics and analysis based on the data that we collect to then fine tune the operation of these devices so that they are not only working at their optimal best, but they're also over time reducing the energy footprint and the consumption so that we then are able to do our business a lot more sustainably than we do today.
Very wonderful set of examples, AI, ML, and practical ones. Thanks once again. Nitin, as you look to sort of take your company forward from the 4x number, what I heard you talking about, what are some of the things that you are trying to put in place in your firm as you sort of look for the next way over the next few years? And what are things which I guess companies should look out for in terms of how they invest over the next few years, maybe 5 odd years?
So we are actually going deeper, and we think there is a lot of scope for embedded analytics, because in retail, the earlier avatar of analytics products for most retailers did not give them the desired ROI, because retail is a very bandwidth choking business, and the earlier tools which would use the data and throw up the insight, and would the user would be expected to use that insight to and take an action. So that wasn't happening in the desired time frame. So what we feel is that if we can use the same data, and we've already started doing some POCs around that, is that if we use that data through the power of AI, and we actually execute the task for the user. So that's where we are going deeper, because we get inventory, catalog, fulfillment data in real time. And that's really rich commerce data, it's gold. So we're going to go deeper into embedded analytics. And I think where, the user, actually the task is done for the user, and that's where the automation completes the full loop. I think that's where we're going to go much deeper going forward.
Nitin, thank you. Good to hear that. And Raghu, coming to you, of course, very keen to hear the long-term investments or the long-term trends that you adopted in your firm over the current period, and how they would impact the longer term. And of course, lastly but not least, some closing comments before I sort of hand over to the audience once again.
Sure. Yeah. So we're doing a few things and thinking from keeping the long-term view. So first one is personalization. Hari touched upon that. So this is again super important. So again, if you think about it, if somebody goes to a store, what he or she sees is what the salesperson shows them, right? So it's like a limited set. So for instance, if you come to Myntra, there are about 900,000 styles on Myntra. So you can easily get overwhelmed with the choice right there. So it's very, very important that we show what we think is the right, selection for a user. So personalization using data, a lot of ML AI becomes super important. Another interesting and very unique problem specifically for the fashion industry is size and fit. So if you buy, let's say, a medium in Nike, so it doesn't mean that a medium in, let's say, Under Armour will suit you, right? So each one is a little different. So how do we kind of recommend the exact right size for you, right? So that you don't have to keep trying, returning, and so on and so forth. So that's again a challenge, a problem that we're trying to solve. So we made some headway into that. So we have a lot more things, planned to address that specific issue. Another one is, again, continuing the whole omni journey. So this is something that is going to continue. So as I mentioned, really putting the power in the hands of the users. They let them decide where they want to start their shopping journey and where they want to end it. So really providing this whole harmonious online, offline, experience for the consumer. So a lot more things that we can do to make that customer journey really easy and seamless. Social commerce is another big area. So the various aspects to it, one is, the whole content side of things, talked about the video technology. So certainly want to do a lot more there on how we can enable influencers to be able to, promote products, both recorded, live, and so on and so forth, right? So that's something which we continue to do. How do you make it easy for users to share, with their family, with their friends, seek opinions on some things that they want to buy? So because, if you look at again, offline experience, shopping also has a huge social angle to it, a community angle to it. How do we try to recreate some of those experiences online? Another interesting aspect is virtual try-on, right? So how do you, enable consumers to be able to virtually try on products, whether it is like, let's say, beauty products. How does this lipstick look on me, or a mascara look on me, versus, and also how does this dress look on me, right? So how do we use AR, VR technology to enable this whole, virtual try-on experience? So, and then last but not the least, I mean, so this is something that we released it a couple of months ago, where we have a mall online, M-Mall. So again, going back to the trust factor. So we now have official brand stores of various brands present on Myntra. So it is similar to what Alibaba did with Tmall in China. So we have over 30 brands there. So here you're assured that this is the brand store that is, that you're shopping on. So if you have a favorite brand already in mind, you can pretty much go there and make your purchase. So these are some of the various things that we're planning to do in the near and medium term.
Thank you, Raghu. I think wonderful set of examples. With this, I think we come to the end of our panel discussion. I once again want to thank Hari, Raghu, Nitin for the wonderful discussion, embellished with examples throughout, which I'm sure the audience has enjoyed listening to. I've learned a lot today. So thanks once again for myself and the audience for being such wonderful panel members. Thank you.
Thank you, Harsha.
Thank you, Harsha. It's a pleasure.
Welcome back. You're watching ET India Boardroom, brought to you in partnership with Transaction Next, powered by NPCI. Our next session is all about sustainable growth in the retail sector. You'll hear from our experts on how to craft a solid omni-channel strategy, about leveraging partnerships to access markets, and about how work from home is going to impact your sales and distribution channels in the near future. Take a look.
So welcome to the panel, gentlemen. And I think it's you guys may have gone through this session quite a few times, because it's an unprecedented thing that we're going through in history right now, where COVID-19 created this strange situation where we had a notice of 4 hours before we hit a lockdown, and then it got extended about 4 times after that, with a slow opening up of the same to allow for trade and commerce and people to go about their lives as what we thought as normal. There are a few questions that I've got, which I'd like to sort of create a discussion amongst the 4 of you. And the first one being, okay, let me start with something which is simple, right? Which is work from home. What was the impact that sort of your organization had to face from conducting your business? So this is not about work from home right now. I'll come to that point later, which is around how did the work from home scenario impact your business from a consumer perspective, but how did it actually impact your operations? How did things change? Devendra?
Yeah, hi Abhijit. So you see, a majority of our business is essentials. So when the lockdown started, we've not shut our stores a single day from the day the lockdown started. And even though, let's say, the senior managers by and large have worked from home, 95% of the organization work in the stores or in the delivery business. So frankly, we've been working, most of the organization. There's not a single day our stores were shut. Of course, in a state or two, stores were shut. And we did have some challenges. For example, only groceries were allowed, or essentials. So the fashion, apparel, and the general merchandise one had to cordon off, put up a barrier, and not allow customers to go there. Then in the beginning, delivery was a challenge, getting people to the stores because the public transport wasn't available was a challenge. So we actually came up with a lot of innovative solutions. You can imagine, for us, the business completely pivoted from majority consumers coming to store where our staff was working mostly. A lot of people wanted goods delivered to their homes. And if you remember in March, April, May, you couldn't add capacity or hire people, that was not the time. So we actually came up with the novel solution. We called up the head of Uber, and nobody was taking Uber at that time. So the drivers were facing a challenge of, capacity was free, and we needed capacity. Our online, through telephone or app-based deliveries went up multiple times, but we couldn't find people, right? So, and right now it sounds all simple, but if you remember, go back to April, there was a lot of social media backlash on people not getting slots for online. So we tied up with Uber, did an MOU actually, all work from home. Can you imagine a contract with Uber who consulted their Asia office? And then we actually had hundreds of Uber cars showing up whom we trained the drivers how to make contactless delivery. And day one, our staff went, and we've done thousands and thousands, tens of thousands of deliveries using Uber. Same way, we tied up with many, many others like Scootsie, Rapido. So I think work from home has taught us a lot of new things. And for us, business has gone on, not a single day in a way. We've been delivering essentials, Abhijit.
Many a time in these kind of scenarios, I'll come to Ambareesh and Vishak and Abheek for their comments, but anything you can shed light on as regards the people themselves are working with you, for you in your ecosystem? How did you manage that? Because that's a big part of the whole equation. We tend to sort of look at rupees and amount of trade volumes, etc., going up and down. But what about the people?
You'll be amazed, Abhijit. Actually, there's a lesson to be learned for our senior managers on that count. We've always been speaking that leadership is at the top, not at all. I learned the other way. I'll never forget in my life, in the first 1 week of lockdown, you were grappling that how to make sure that everybody turns up at store. There wasn't public transport. People working in stores, all of them don't have cars and bike. Many of them have bikes, but not all. You'll be surprised. I can give you examples that people on their own turned up walking 7 kilometers, sometimes stopped by the cops. In the beginning, they didn't have passes. If you remember, later government issued passes that you need a pass to move around. We were essential workers, but that also happened after some days. On the day one of lockdown, there was a lot of confusion. And so many of our staff actually turned up at the store. And later, when I did go to the store, I met some of those staff and asked them that, what were you thinking, and how come that you weren't scared to walk or come alone 7 hours when there was so much? And the answers were so touching. They said, "Ab nahi karenge to kab karenge." We need to serve the people, and these are people at store level. So there's a lesson to be learned on leadership and being humble. And trust me, it's not as if there was a challenge to ask people to work, as if try to motivate them. You'll be amazed. This was a cause people aligned to on their own, and the task was really easy because essentials was so much in demand, like healthcare. There was a sense of responsibility. So I will take no credit that we really had to really call upon people. Frankly, everybody rose to the occasion on their own. As I say, in our case, don't forget, more than 90% people work in the stores, and they were working all the time. And when I say stores, means including the delivery staff.
No, thanks. That does give a lot of insight into it. Vishak, how about you? Is there anything else to top off what Devendra is saying?
Oh, yes. I think we also, in the apparel business, I work with Madura. In the apparel business, there is a lot of retail and there is a factory setup, a manufacturing setup, and we have the middle. Of course, there is a lot of tales of stronger sacrifices and performances in the front end and in the manufacturing. I guess your question is about work from home. On the work from home side, I think it was a lot of revelation. Starting from, you got to figure out who has what aged kids who come into the calls, whose dogs bark suddenly in the meeting, to a lot of things that people learned to get used to over a period of time. Very early, we created some kind of policy guidelines around work from home, so that the timings are finite, the ways of engagement. We created clear no meeting periods and so on. Once you got used to that, it became relatively easier. We learned how to do virtual store visits for places that you couldn't travel to, and that again worked fairly well. So in all, I would say it has worked out reasonably all right. It can be quite stressful staring at a screen for long periods of time, so we had to deal with some of that as well. But I would say yes, it has taught us a lot of things, Abhi.
Abheek, from a consulting perspective, what changes did you see happening at the workforce of the organizations?
Yeah, so I think there was always this deep that you can get the maximum impact when you're working side by side with your clients. When you're in the trenches, right? And our model used to be 4 to 5 days working at the client side. I think as work from home taught us, there is obviously nothing which substitutes being there physically 100%. But I think you can get maybe 70-80% done remotely, right? I think being there physically makes a difference, but I would say 70-80% efficiency, I think, is something which we ended up achieving. The other thing was, when we were working with some of the retailers and some of the essential services, it was interesting because in certain occasions, the client organization that we were working with actually designated the consulting part of quote unquote essential services within themselves. So that gave us a sense that at least in certain clients, we were working so closely with them that it was difficult to separate who was the BCG team member and who was the client team member, which was there. And the one final thing which I would say somewhat in a lighter vein, today right now I'm doing this call sitting from a hotel room, but I think the amount of travel, I think, is going to see a certain reduction even when new normal happens, business travel. Now, whether it's going to be 20%, 25%, I think we'll have to see. But I think there is going to be some permanent reduction in business travel even when new normal comes.
Okay, that's interesting because I'll come back to that or maybe speak with you about that at a later point. Ambareesh, anything you want to add to this at this point?
I guess just a couple of things. One is that, so speaking for Pepperfry, I guess the most important thing we figured was that everything needed to get a lot more simpler. So if there were processes that we were currently running or we were running at that point in time, which had a little bit of complexity in them, either if there were processes that we were running which were facing the consumer or internal, they needed to get a lot simpler. So frankly, the first month or so, we spent time just figuring out what those processes are and simplifying them. The second thing that I think, outside of the stuff that people said, and there's some great stories out there about the early days of the lockdown, but I think the second thing that stands out for me is the fact that I think productivity improved substantially. I mean, suddenly you went in a zone where you had endless 3-hour, 4-hour long meetings. I mean, people used to get their stuff done on time before they turned up for Zoom conversations. And I thought that made for an immensely productive period of time. The most important thing from our standpoint, and our business is actually, very similar to, let's say, a lot of retail businesses in the sense that there's a high consumer touch point. The most important thing for us was we wanted to be amongst the first supply chains open, right? And so therefore, even the stuff that folks did in the supply chain teams across, 23 locations across India, despite local regulations changing on a practically hourly basis, I think was fantastic. I mean, it spoke volumes for the ownership that even the last delivery guy has for the success of the company. I mean, and to me, that was heartening. One always thought that, that would be the case. It's just always great when you see proof of concept panning out.
So let's move on to looking at the value chain in your businesses. from the market in. So what changes, Abheek, you see coming through from a consumer behavior perspective, given it's been a long time. It's been almost a year or will be a year since people have been stuck at home, been in a lockdown, not traveling, not moving around, different age groups and different socioeconomic strata operating differently. So what's your view on what's really changing from a consumer perspective?
So, I have always been a big believer in the Indian consumer story. Okay. I think, 2/3 of our GDP is consumption. That has been, in some sense, the prime mover. Now, I think what has taken a hit in the last 12 months is we had a unique situation where, the three drivers, I would say, of this entire cycle is consumption, credit, and confidence. And both consumption and confidence actually took a hit, right? I think the good news is, especially in the last 3 months, we are seeing consumption and confidence both coming back. And we also have a situation where credit rates are low. So, what we are going to say, and, the way at least I think about it is we should almost not think of the year 2021 from a baseline perspective, right? Because if you look at the next 12 months, from a baseline perspective, everything will look fantastic. But if you look at from 1920, I think we are going to see an increase because, saving rates have gone up in the last 12 months. So people actually have money, which is there. If you look at it from a perspective of confidence, which had taken a beating, I think that is back up. And there is positive credit, which is there. So I'm actually hopeful that, in the next 12 months, we are going to see an uptick. Now, it is going to be different across categories, obviously, but I think we are going to see an uptick compared to earlier.
And Devendra, what's your view if you go by your business segments? How do you see the changes happening there on the same subject of consumer behavior change?
Abhijit, I can add to what Abhi said. So in the beginning, a lot of, we've always been omni-channel. So, but our online business used to be in a low single digit. So that really shot up multiple times. And over the last couple of months, it's actually, the footfalls are coming back, people are coming back to the store. So some bit of numbers are now happening in much in favor of people coming in the store. However, some changes permanent and people have adopted digital. If you say specific to the categories we sell, let me take some like in the food and grocery business. I will also dwell on the apparel side. So I think the biggest one we've seen is back to roots. I think nostalgia came in for consumers. And if you remember right in the beginning of pandemic, I spoke to many consumers and there was this vogue of watching the famous series Friends and even Mahabharata and Ramayana. And much to my learning, people said that there's so much uncertainty that they want certainty, so that these stories they've seen in the past actually balance the uncertainty. So they want to bring in certainty, and it brings them a lot of peace when there was so much unknown out there. So they wanted the known. Another one I picked up is back to roots. While we waited for the cure of the virus and while the vaccination has started, I think consumers went back to age-old proven repository of knowledge, which is all these homemade remedies, which boosted our immunity. And I think consumers are going to continue this habit. So the belief in natural has increased than ever before. And brands must identify this relevant shift and bring convenience and work toward products. Like, for example, people can't keep taking multivitamins and pills, and when the travel will start, people can't keep carrying these tablets. And even when you take it in the form of a tablet, you feel you're taking a medicine, which they're not. So I think, how do you marry them, food with these nutrients? For example, let's say multivitamin atta. Can you add other things to the atta so it becomes a part of the food? Or is it a part of the soup? So I think these trends will come in. Another one is branding of commodities. You see, we live in a world where they say you are what you eat. And more than ever before, people want to know what they are eating. I remember in my days, we used to design brands and pack, and we would always spend time on the front of the pack. And the back of the pack used to be mandatories like MRP, batch number, ingredients, nutritional value, best before date, address of the manufacturing location. We would not spend time. We would give it to our team and say, you know, you finish this part. You'll be surprised the number of people who are picking up product in the store and actually studying the back of the pack. They want to know what is in the product, what nutrients, what nutrition value. So I think back of the pack is becoming important, and what it means is people want to know what are they consuming. So I think, and more products are moving from commodities to package, and branding will even become more important because branding does signify hygiene, safety standards, and also in a way, the source credibility of the commodity. And we have clearly seen it in categories like staples, atta, poha. It's also given a fillip to our own brands. And another one I can tell you is from outsourcing to insourcing, another trend. You see, India, unlike the West, has never been a DIY, do-it-yourself market. Thanks to we're able to get people to work for us for much lower cost than, let's say, for example, in the West. But now when people weren't available and people even reduce the number of touch points at home, you know, there's this new term which I say like SaaS, software as a service. I think PaaS, like product as a service. So people couldn't go to salons, and there's so many new products which have come in the market like pedicure sets, epilators, home grooming kits. There are new restaurant style sauces. People were stuck at home and they had home food, but after some time they wanted very tasty restaurant style. So new sauces have come which are like more spicy and they give you a feel of you're having a restaurant food at home. Even we innovated and we have a lot of pre-cut vegetables. If you want to make a pulao, you don't have to chop many vegetables, you know, and you can save your time. It's all pre-packed in a tray. You can just pick it up for us. So what we call a recipe ready kit. And I think this addresses the whole point of negative labor. And I say on a lighter note, you know, in the pandemic, Google Maps, whatever you type in the Google map, all it'll show you is take you to the journey of your living room or your dining room or your kitchen or your bedroom. You really couldn't go out. So I think people replaced discovering destinations with discovering talent. And some of them will stay even post pandemic or even when all of us are vaccinated, because people have discovered they can do all these new things. And I think in some way in India, their DIY market will start.
So obviously you're talking about a DIY market, which isn't just necessarily about furniture and putting up your own electrical fittings, etc. It's a whole service aspect around a product. Ambareesh, coming to you on that, how do you see your business getting maybe more avenues and more segments of the market which you can address?
Yep. So actually, the entire shift to in consumerism over the last 1 year's worked in favor of most digital businesses, and frankly, Pepperfry has gained a lot. What are the fundamental shifts? The first is the fact that people first started buying grocery online. They got used to the digital medium, and that translated as supply chains opened up into them making other purchases online. So I think the overall digitalization of the consumer bit has increased substantially. Now, our thesis as a company has always been that there's just one consumer, right? She could be on a mobile phone at some point in time, on walking in a mall at another point in time, or on a laptop at a third point in time, but it's the same consumer. And I think what the pandemic did was that it made it very clear that it's the same consumer. You can serve the consumer of a physical store, or you can serve them digitally online. You're still serving the same consumer. And I think that's a fairly significant realization that most businesses would have had. And it's also something that's engendered a particular type of consumer behavior post-pandemic. So that's one very, I think, a big ticket item. The second thing, speaking specifically from my businesses, people spend a lot more time at home. So earlier, if, for example, you put up with that sofa which squeaked a little when you sat on it, now that you sit potentially 5-6 hours on it and do your calls, etc., I mean, you're not willing to accept that same sofa, or the lamp has to be just right, or you need a footstool because your feet ache after being in the same posture and not in an ergonomic chair. So all of that's resulted in, frankly, higher consumption for home and lifestyle goods. And that's the third trend, I think, which is going to continue. Just that awareness and an appreciation of all the things that are around us at home has increased manyfold. So, I think all of these trends are here to stay. I think even as things open up, you will find the need for businesses to, not only serve their customers really well in the offline world or in the real world, but also to serve their customers really well in the online world. And I think what this is going to result in is fundamentally the lines between online and offline, they're just going to keep getting blurred. I think one of the fundamental trends that will happen going forward is the use of augmented/virtual reality in blurring the lines further. I mean, if I were to be able to sell a table off a mobile phone screen where when you knock on the wood, you actually get the feel through haptic sensors of exactly how the wood would feel and the sound is exactly the same, then I've fundamentally blurred a huge line and crossed the line from online to offline. So I think these are fundamental shifts which are here here to stay, and that's all courtesy what's happened over the last 9 to 12 months. So yeah.
Abhi, just one quick comment. I think the only thing that I would say is, as we look at the last 12 months, obviously the urban landscape got impacted very differently than the semi-urban and rural, right? I think we should just keep that picture in mind, because if you look at the India versus Bharat, right? I think India, a lot of things, the way we are talking about it, a lot of that happened, right? But I think what also showed, if you really think about India as a portfolio, actually in middle India and rural India carried through a set, in this time period. And I think that's important to keep in mind. The second piece, and this to my mind is really going to be a fascinating question, is which of these are going to sustain and which are going to revert back. In China, obviously they had a much shorter lockdown, but the day after it opened, some of the luxury stores did their highest ever sales because there was such a pent-up demand, right? So it was like back with a vengeance. While if in the US, if you look at it, or in parts of Europe, pantry loading, which had happened massively the first time around in the lockdown, the second time it has actually not happened. So, to my mind, that's going to be very interesting. Which of these trends actually are going to sustain, and which of them are going to, revert back to some normal. And, the thing is, if you ask consumers, I don't think you necessarily always get the right answer. Because we are so caught up as consumers in our current reality, the consumer says something else, does something else. So I think we should just be mindful of that. The point that Ambareesh said, keeping it simple and being reactive, is going to be extremely, extremely important.
No, a very, very valid point, and we bring Vishak in on this. So just a couple of comments from my experience, having also working in the same sector, is I find it quite fascinating how India tends to get carried away with hype to begin with. After a point in time, reality sets in. And then there are about 167 or maybe 212 realities across India. Just given the urban and the rural and the semi-rural, semi-urban, whichever definitions you want to have. Vishak, what's your view on this? Like, are we seriously as consumers going to change that much, or are we going to revert back to type?
Okay, so there are two questions here then, Avi. One is now, and second is what is a sort of permanent change which has happened. So here are and I'll take my industry's lens, apparel business, and share from that perspective 6 trends which are relevant for all of us. And absolutely, Abheek is bang on in terms of the trends being very different for India versus Bharat. Trend number 1, and this is probably more urban, is we are going to see a big trend called back to office. And back to office is going to come impact all of us in many ways. For me, it might be people buying fresh clothes for going back to work. And fresh clothes might be because they're bored of the old, fresh clothes because they've not, they've changed their size, their body type, they've lost weight, gained weight, any of those things. So there is an entire thing around back to work which is going to happen. And different companies, different businesses are going to be able to respond to that the way they would. The big fat Indian wedding is going to be back. And many people would have seen a strong business rebound in October, November. And that was to a large extent some opening up of weddings. And the wedding season, as you know, India gets married by the star signs. So the stars were just right for October and November, actually up to 12th December. And it will happen again April, May, June, especially May and June. So we're going to see a very, very strong, impactful wedding season. And if hopefully with the vaccine and all of that, if things look better, I think we're going to see and again, different businesses will have different applications of this insight, but I think it's going to happen. Festivals, and this is where Devendra's point around back to roots, and it's going to be big. Festivals already, are helping people to find some kind of grounding, some kind of connect with friends and families and all of that. I think festivals have almost got one more boost of energy, and people are celebrating festivals strongly. Fourth, play. I think health and fitness became very important, and my sense is it will continue to remain so. And again, like for Devendra's business, it might be fortified foods. In my business, it might be things that help you to comfortably play or jog or walk or any of those things. So play, my sense is going to be a trend which will likely continue. Play as in exercise, health, fitness, and so on. The fifth, which is hanging out with friends, hanging out in various public places and so on, which had come down significantly. I think it's going to come back with a vengeance. So again, many things which are about hanging out are movie theaters opening up, malls coming back to full glory, and so on. I think hanging out is going to be a very important aspect. And finally, travel. I think travel is going to be, like Abheek said, is going to get repurposed, so to speak. People will change the reasons for travel. I think a lot of meetings where you just have to exchange information will probably shift to settings like this. But there are many more which will require travel, and I think travel is going to get repurposed in that sense, including a lot of domestic travel. Even domestic vacation travel is expected. At least we see a lot of opportunity in terms of things which you do to enable a lot of nearby getaways and so on. So these are 6 things that I sense, Abhi, which will be in the next few months that things pan out. Of course, all of this assuming no second wave and things going in the same trajectory.
Abhi, if I could just add to this.
I think, yeah, go ahead.
Yeah, so I just wanted to add one more thing that we've been noticing on our marketplace, and I don't know whether it's a sign of things to come, but it's been something that's been a fairly secular trend over the last 6 to 9 months. It's that, so there's this entire shift or clustering of brands that's happening. So the bigger brands are getting bigger, and the smaller brands, or rather direct to consumer brands, are actually taking another bunch of franchise from towards for their products towards the consumer. So it's almost as if it's the middling brands that used to exist, which had consumer franchise, are actually reducing substantially. So it's either the bigger brands getting bigger, or direct to consumer, smaller brands which are serving customers, and there's a lot more customer franchise getting driven. I find that a really interesting trend, and it's something that started emerging over the last 6 months, at least on our marketplace. So I just thought it would be relevant.
And I can add, Abhijit, to even what Ambareesh and Vishak said. It connects so well. I think first of all, in apparel business, this category, what Vishak calls play, we call it athleisure. I'm sure that's a term in the industry. And I think it just took off when apparel was allowed to sell. And I think Indians have become so comfortable, then that's, I fear a lot of them is going to wear it to the office when they head back the office. The younger ones still do. The other one is festivals. You see, when it comes to grocery and food business, what Ambareesh said, we saw it in brands. Trusted brands are becoming even bigger. Older trusted brands, because people went back for trust, in this unknown. And second is festival. When else do people connect with each other, even within their own families, cousins, uncle, aunts, friends? I think it's on festival, on Diwali and Holi, and the number of festivals India has. Otherwise, everybody's busy now. So people are missing it so badly. I have this feeling that this whole pent-up demand, I think, and we saw it in Christmas. We saw it just 3 days before Diwali. I think it works very well. It's exploding. So I think that's going to be huge in the coming year.
So, Abhi, just to one comment, people always say in retail, it is about location, location, location. I think, I was having one of the conversations, and what Vishak said, I occasion, 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 instead of location, 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 right? Because actually, if you look at the themes that Vishak also talked about, each of them is related to an occasion or a set of occasions coming together.
Being a consultant like I am, he quickly picked up the 3 words which come into play. I did have another question, because one of the things that also comes into play, since we're doing a lot of work with organizations which are in the service industry also, right? And a large part of the population that's working in the urban side of the country is living in homes which are maybe 750 square feet to 1,000 square feet in size, with both husband and wife working, maybe at least one child, if not 2, going to online school, and at least one set of parents at home. So one of the comments, because of some of the surveys we're running with clients at this point in time, is that people definitely want to head out because they just don't see that their 1,000 square feet home, where there's 7 individuals or 6 individuals living over there, is going to give them any kind of respite or time for themselves, or even just time to think. So I suppose that comes into play when, Vishak, you mentioned about people will still want to meet in person. It's not as much fun, is it, that when we, for example, we're just having to meet on Zoom right now. It's not the same, let's face it. Companies will resist internal travel for some time, till we realize that, it does seriously play with people's emotional linkage with the brand and the team, because you're only meeting them in a faceless scenario over a video conference, or you're meeting them with the video on, but that's about it. Sorry, Vishak, you were saying something.
Yeah, just one point to build on what you said. There is another side to it. And I'll tell you, I was talking to a good friend who's the CEO of a retail organization, and we were having a business review. And there was an internet outage twice on his side, and he was apologizing. Hey, sorry about this and all. I said, please don't feel sorry about this. You're my customer. In a normal world, I would have woken up at 4 in the morning, reached the airport, stood in the queues for check-in, for security, for waiting in the departure lounge, got into the plane, got off the plane, went through all of that, get into a cab, come to your office, wait at your reception and meet you. I think I'll take this 2 minutes of outage. So, I think there are, and we had a good meeting, and our business continues to grow well with them. So there is another side to it, that for some kind of transactions, there will likely be a new normal.
Did this situation actually give an opportunity for some strange ecosystem players to come in and help you tap a market which you hadn't tapped before? Could be a segment, could be a region, could be a particular socioeconomic segment of people, so on and so forth. Devendra, you want to sort of think about that and give a response?
So I can, Abhijit, speak that I think the ways of working evolved. I can, rather than on the consumer side, let me speak on the customer and the partnership side, the channel side. I think a lot of ecosystem partnerships came into being, and you see, you suddenly realize that an organization like, when the pandemic started and the lockdown started, and we were facing that, oh my God, from so many orders in the store, now a large part or a big part is shifted online, and we don't have people who can deliver because that wasn't planned. So then you wonder what you're going to do. So I think an organization has a limited sphere of influence, but when partnerships are explored with ecosystem players, I think it unlocks value for all the participating organization. There is this whole digital conversations about platforms and creating ecosystem. I think it can be done physically also. Obviously it's part digital, part physical. And I think today partnerships are not just limited to a few, but these new terms like frenemies and co-opetition, these are in vogue, and rightly so. If you see some of the wallet brands or payment apps, they have their own mall, but they also take payment from a competitor who has a payment gateway or who has a payment option, and vice versa. So you are competing and you are actually working together at the same time to serve the same consumer. And I think we see a lot of live examples now, which in pandemic have come into being. For example, the vaccine itself, a couple of pharma companies were working together to develop the vaccine together. If you see in automotive, Suzuki and Toyota, I think they compete, but they came together, on an alliance to work on an electric vehicle for technology and autonomous, drive autonomous cars. And again, nothing to do with the pandemic. This will continue to go on. I think this ecosystem partnership is something which is going to grow. And I can tell you for us, as I said, when the lockdown was announced, the online delivery, people wanted goods delivered at home, and that went up multiple times. So I've mentioned we tied up with Uber, all work from home, contracts were done. But that was only one example. We tied up with so many companies like Scootsy, with Swiggy. We had to create a massive partnership so that we can have a capacity to deliver at homes, and all these, MOUs were signed. And in Hyderabad, I'll tell you, Flipkart had approached us to work on an experiment, and we studied data analytics and saw in the beginning, consumer were buying, when there was pantry loading happening, they were wanting to buy all the orders has some SKUs common. For example, you don't want to be stocked out when you're stuck at home with sugar and salt and let's say, wheat, atta. So most orders had it. So we actually bundled it after studying data and made a single pack. And then when Flipkart approached us, we worked with them. And again, that's a partnership. And we could sell that in Hyderabad. So I think there are multiple examples which otherwise would have never taken place. Who would have thought we'll deliver groceries in Uber and we'll be demonstrating to an Uber driver how to make contactless delivery and with safety and with a distance and deliver. So I think there's a lot of things to learn.
So, Abhi, one of the interesting examples that I saw at close quarters was a bunch of health tech, hospital players, etc., came together and created this platform, Swasth, which was basically saying, create a common digital platform rather than, different people creating that. And that was offered as a public good to, the government and etc., right?
Yeah, I'm looking for sort of examples, and thanks, Devendra. I'm looking for examples wherein a whole new segment was uncovered, or a whole new market, which in the past you would have thought was very difficult to tap. Cost to serve was going to be too high, whatever. And this sort of gave an opportunity to think things differently. While Devendra does have good examples. Was there anything like that, Ambareesh and Vishak?
Actually, multiple things come to mind, Avi, as you ask. For example, before this pandemic, we had never made a mask. Okay. Within a week of the pandemic in India, we had our first mask. And within 2 weeks, we had something which was ready for testing with consumer panels and so on. And we had a 3-layered mask, which offered some 99+% bacterial filtration efficiency and so on and so forth. The point I want to make is this. A business which was not used to a product like this has sold over 1 crore masks. Now, what it did for us was not just to say, hey, we have sold well in masks, because that was as much a responsibility as brands as it was, something we had to do in the market. What it told us was, hey, look, we can be a lot more flexible in manufacturing in the kind of ways that we do things. And it led to many, many changes in the way we create flexible manufacturing in our business. So that's one kind of a dramatic shift that we were able to see. Many come to mind. Maybe we can ask the other panelists to share some of their thoughts.
Actually, Avi, there are, I think, 3 things that come to my mind. One is that, we've always been a home furniture company. So we've shied away from office furniture. And suddenly, one of the things we realized was that people's homes had become their offices, right? And so therefore, entering into, the entire area of setting up a home office, which includes ergo chairs, study tables, etc., was just a completely, let me not say completely. I mean, we used to do some of it. However, just the way we had to expand that entire range in order to cater to a completely new customer need was something that stood out for me. The second thing that I think stood out for us was the fact that, in a time when, and we had this India versus Bharat conversation earlier in the debate, the thing that stood out for me was, while India was or is going to take some time to, or let's say the more urban areas, etc., or the more metropolitan areas are taking their own time to come back, it's the non-metro towns where business tends to have picked up and come back fairly substantially. So one of the things that translated into it for us was just our entire franchisee store expansion. We've added close to 15 stores in the last 2 months and done all of them virtually. At least the entire design, walkthrough, store launches, etc., everything has been done virtually. And we're currently adding like 5 a month. Which is way more than anything we've done on a run rate basis than ever before. So these are things that kind of stood out for us. I mean, creating a completely new customer segment especially for office furniture. The second being franchisee expansion, especially as we expanded into non-metro towns in India. The third thing that stood out for me is the fact that, and I think the segments, still we've just scratched the surface on it. I mean, there was this entire segment which used to get products made of carpenters. And so there was this entire, let's call it made to order furniture segment. And I think that segment's has gone down substantially, and it's instead being taken over by the ready-made consumer segment. And I think the consumer is very different for the ready-made segment versus the erstwhile made to order segment. And so therefore, I think for us also as a business to evolve over the next 6 to 12 months, we'll have to get a deeper understanding of that consumer. We'll have to keep bringing out a slew of products which address that consumer. And I think that's great headroom for growth over the next, potentially if we get it right, over the next 5 years.
And Abhijit, I can add to what Ambareesh said. In fact, one of our chains is Nature's Basket, like in Bombay, Pune, and Bangalore. And you see the whole adoption to organic and gourmet food is a very slow burn in any country. It takes time, and it just suddenly shifted. It tipped because of the whole health reason and immunity. And so Nature's Basket saw that big shift in people wanting to buy much more healthier, natural, gourmet food. At Spencer's, I'll tell you, we could tap an area of customer, not a behavioral change, but right in the beginning when people weren't coming out, imagine our stores are designed to serve the consumers when consumers come to the store. But when you get such a massive online orders, actually the stores had to learn to develop as a dark store. Because you're at the same time serving the consumers coming, and from the same store, your staff is picking up, packing orders and delivering to the customers. And that's where we, worked on this RWA concept, and we actually pioneered it, this Resident Welfare Association and Buildings and Complexes. So we now have a massive database. We got in touch with the society presidents or secretary, and we kept a box in the building, and we said till 4 o'clock or next day 11 in the morning, please put your orders. They would write and put in orders, 60, 70, 100 orders at one time. One of our persons from the nearest store would go pick up that dabba, bring it to the store, pack 100 orders, and in a smaller truck or a van, bring it to the building. And then, through social distancing, keeping a gap. Imagine you could serve 100 orders at one time to different individuals in the same complex. And you didn't have to make 100 different trips on a bike for the same order. If it was an online or a phone order, you could bring them as one logistics cost from the store till the building and then serve. And this was pretty big. We could do it with hundreds of complexes. This is not a small number like, just an experiment. It worked very well for us.
So great. So Abheek, unfortunately, network problems made you bounce off, but it was about saying that did this particular circumstance and situation open up new segments, new markets, previously too expensive on a cost to serve basis, or maybe difficult to reach out to? And we had some really good, interesting segments and customer segments that opened up and products that opened up. So that's great. And this, so just to complete that, Devendra, but do you think as things open up, And as people actually start going out, because there's also an experience thing when you go to a Nature's Basket shop or you go to a Spencer's shop, right? Do you think the same trend will continue about the 100 orders a day being put into a cardboard box and people are going to continue doing that? Or you see that trickling down a bit and it was more an opportunistic play?
Absolutely. It continued for many, many months, but the RWA numbers have trickled down because the customers are back in the store. 85% of, see, so what's happened? Let me give you an example. A typical consumer, if was buying grocery 3 times in a month, coming to the store, and I'm making it simplified. The number is in decimal because you divide the number of bills by the number of customers. So the number comes in decimal because not per customer. Because of the pandemic, people wanted to reduce the touch point. So if they were coming 4 times, they started coming 3 times or 2.5 times. So the number of trips went down, but the buying order, the average bill value, as we call it, ABV, went up by 20 to 40%. So they said, I'm going to come out less, but in each time when I come out, I'm going to buy a lot more. So rather than buying for 1 week, I'll buy for 10 days or 15 days. That phenomena, the good thing is that while consumers are coming back, the ABV is coming down also, but not to that extent. But you're absolutely right, Abhijit. The RWA model served very well in those times. It is still on. But of course, the numbers have come down because people don't want to go down and put an order in a dabba, and they're very comfortable now calling on the phone. And that's got replaced with our e-commerce app and our phone delivery.
So I think we're on the hour. And let's give the management consultant the opportunity to have the last word, maybe. Abheek, anything you want to add or anything we haven't covered? I'm sure there's a lot we haven't covered, but anything specific you want to mention now?
No, I think the only thing I was saying, and I hope I don't get cut off this time, was, I think if I think about retail...
It was not in our hands. Abheek, it was not intentional. It wasn't in our hands.
Retail for sustaining growth. I think the one thing I would throw as an opportunity for retailers is what DC and Vishak were talking about, which is, there are some things that retailers don't end up doing because the cost, time, effort of creating that infrastructure is very high, right? If there can be common infrastructure which multiple people can use, whether it is digital or physical, that'll be competition, cooperation at its best. Can that be something which can be an opportunity? And what I was describing earlier is in healthcare, there are examples of that have actually started happening at scale. If you look at the telecom industry, the sharing of the airwaves in some senses is that. The bank ATM network is that. So I think that's something which could be actually a very interesting opportunity for retail.
No, interesting, very interesting. Yes, it's just that I think the Western world where that actually happens very easily is a very homogenized world compared to the 167 or 238 Indias that we have, which then creates a bit of a dissonance in the ability to manage that very easily. Thank you very much. I don't have any further questions. So over back to the ET people.
Thank you, Abhijit. Thanks for it.
Thank you, Abhijit.
Thank you, Avi.
Everyone, thanks.
Very cool.
And now for our next session on the ET Enduring Boardroom. Now, Indian retailers and merchants have been tirelessly innovating in order to woo the next-gen consumer. And just as retailers are evolving, so are consumers. In the next session, our panelists will elaborate on how disruption in the retail credit ecosystem could be the next booster shot that the Indian retail industry needs.
Hi, good day, everybody. Here, we are having the panel discussion in terms of the disruption happening on credit cards. A very eminent panel with Sudipta Roy, business head from ICICI, Vidya Pradeep, HDFC, and Girish Buddhiraj, SBI Cards, all stalwarts in the area of asset and cards for banking and the payments industry. So welcome all of you.
Thanks, Pravina.
Thank you, Pravina.
So the industry has seen a year like never before. with both issuance and volumes having, taken a bit of a downturn. But I would like to hear from all of you what you see as the market insights as it stands today. How has the last few months panned out for the credit card industry? Do you think we are looking at a situation where certain things have changed in the post-pandemic world that weren't the same before? So, can I just go around the panel and then we'll take further questions there? Girish, could we start with you for your opening comments on this?
So actually, you're right, Prina. Last 7 months of this financial year have been actually very, very interesting. So we have seen the lows of the April and May was still a recovery after April, but April was really, really where I think for the whole industry, the numbers crashed. Most of the numbers are available with RBI, but the whole industry experienced that because of the lockdown. And I think India was the severest of the lockdowns which we have seen. Okay. So things started to improve in Q2. In fact, we saw, and I think the industry also saw, close to 50% jump over Q1 numbers in Q2. A player would have been here and there, but approximately that was a kind of jump which was seen. October has gone really well. There is a lot of pent-up demand, which we have seen coming out in the festive season. People's, as you have known, savings rates have increased. So people have indulged into some kind of consumption-related expenditure during this festival season time. 2-3 trends which are coming out very interesting, which we see is the first one is that the share of online has now increased to more than 50%. So that's a very interesting one which we see. The second is that the online spends is now happening across age groups, which is also very interesting. So age groups of 50 plus, 55 plus, 60 plus, people who were not very comfortable earlier doing online spends are now doing those spends, and that is a very encouraging trend because it increases the width and depth of the card spending pattern. The last insight that we have seen in this period is that a lot of new categories which were not earlier prevalent on an online platform from a consumer behavior perspective. For example, jewelry. Utilities was always popular, but now it has taken a further increased heights. So some of those categories, online education, these categories have picked up quite majorly. So we believe that this is another shift towards digitization from cash, which has happened during this period of time after demonetization.
Sangeeta, over to you. Do you think the good days of 25% CAGR for the credit card industry, will continue to remain? And overall, can you give us your opening remarks here?
So I think what we saw from April to August, maybe was a disruption. April, May was bad disruption. But we started coming out of it in the month of July, August, September. In October, we got back to, at least in our bank, we got back to normal volumes in both in terms of issuance and almost near normal volumes in terms of spends. I would say almost near normal volumes in terms of spends because there's a small segment of hospitality and travel that still remains muted. Other than that, most of the categories and some categories are overcompensating for the sort of lack of traction in the hospitality and travel segments. And as just Girish said, there was a lot of pent-up demand. So we saw that some of the demand translated into the card spends in the month of October. So October overall was very good for the industry. However, one of the things which has been transformational during this period is the digital transformation that at least we have seen during this period. Honestly, if you ask me, the 25% CAGR, both in terms of issuance, some issuers, the CAGR on issuance was also actually a little more smaller issuers. But in terms of spends also, I do believe that we will come back into traction sometime around April, May, full traction by April, May of the next financial year. And some of the changes that we have seen will be reversible. For example, if you see prior to COVID, and we told it, analyst presentation last year, is that 45% of our card sourcing is digital. Without going into physical actual numbers, that number has actually grown manifold, right? And one of the things that fortunately enough, right, in the month of November last year, RBI came out with this video KYC guidelines. No one knew that this particular guideline will be so useful during the period of COVID. And one of the early things that we did when COVID hit and our sourcing volume dropped to almost 1/20th of our normal volumes in the month of April, is then we said that we have to keep our video KYC stack up. So we built it in April and May, put it into production in June. Happy to tell you that our video KYC, the amount of volumes that we are pulling in the month of October, right, almost close to 55 to 60% of our card volumes came into videos, right, in the month of October. Now, that is great because first and foremost thing, the period of KYC, people are able to do it from their homes. The amount of time required, because the entire process is digital, the application is hitting the underwriting, back-end underwriting much faster. It is hitting in 2 hours compared to 2 days earlier, because the physical application used to pickle in various desks for almost 2 days before it hit the underwriting tray. And decisions are like being done in about 18 hours to 48 hours. So actually our TATs also have dropped. So I see this trend continuing and remaining after COVID. And that is why I'm saying that it is not 25% CAGR that we'll see. It is 30%, 40% CAGR that we'll see. Because the fact is that some of these efficiencies will actually de-bottleneck some of our processes and make the process much more efficient. And once the process becomes more efficient, you will see volume shooting. So I do believe that from April, May next year, you will see the industry moving to a next level. As I say, step function jump. You will see a step function jump from next year.
Yeah, that's good news.
We have also gone through a huge trial by fire on the credit side. And the industry has proven this time that the industry has wherewithal to hold credit.
Clearly, digitization has been the silver lining on the dark cloud that we've had. So it's been the golden moment for digitization, and players like yourself have really taken the full benefit of whatever has been offered on the plate. And if we can convert 25 to 35, 40, that would be a big moment that we can certainly talk about more next year. So over to you, Vidya, with that good conversation. How do you see it, and what are the insights that you have come across in the last few months? How do you see this playing forward now?
I think apart from what Girish and Sudipto have made point, I think they've covered most of the tectonic shifts that are happening, right? Because I think pre-COVID and post-COVID, we saw e-commerce significantly up. We saw the digital transformation where everything from being done on the ground had to be done digitally. Card players had excessive implementation. Moratorium is something that all of us had never implemented. We had never implemented, ex gratia. We had not done a lot of those as well. So it was a very different time where you had to dabble with consumer shift, tectonic shift in consumer behavior. And we had a lot of new initiatives, which was huge learning for the industry as a whole. For the first time, we've dealt with, some of those regulatory initiatives as well. On the consumer insight side, I think when POS took a beating, e-commerce more than replaced or has grown significantly. The YOY growth on e-commerce is upwards of 18 to 20%, which in a COVID era, you wouldn't expect or you wouldn't see it, but that's what it displayed, even pre-festive. You are also seeing, even in POS, you're seeing recovery, but funnily, what we did not see pre-COVID for in our bank, we are clearly seeing a lot of contactless transactions. Suddenly, a good upwards of 20% of our POS transactions are now tap and pay. So there is a clear shift in safety and people wanting not to put their hands on the POS machine, and they are asking for tap and pay with the merchant. So what used to be 15% has become 20. Now it's upward of even 25% of POS transactions are contactless. There was a shift when things like travel went down, insurance took over. There's been a significant rise in number of people growing their insurance spending. For whatever reason, there is a consumer behavior and There is a need to cover themselves. There were good policies in the time. When Ola or Uber transactions went down, you saw Swiggy and Zomato taking over. So you can see a clear shift on when one got impacted and what replaced the other is very visible, very clear for the industry. And I think in some cases, I think all of us, what we are trying to do is ride the wave. Like the EMI growth has been significantly high. Even pre-festive, we have seen a significant growth in EMI transactions, and the need for credit is very clearly there and growing. So I think all of us are trying to ride the new wave, the new normal, and look at what all is up and running and recovered much faster. Even at upwards of 130, 140%, some categories have bounced back. So we are riding that wave and trying to pull those categories which are not yet there. I think that's where the industry is, and we are as well.
I really like what you said, relate to it very deeply. I think we are seeing the same from a rupee standpoint. Contactless, transactions increasing every day. And I think the question is, while there are contactless terminals in the market, how does one replace every card that is there, already in force, right? How can individuals be made more aware that what they have is perhaps a card issued a few years back, and how could they kind of, reach out to their bank to get it exchanged or replaced? And it also leads us to what we've launched on the soft POS side, which is really looking at creating the enablement needed for physical acceptance that is deeper into the markets than where we are today in India at about 4.5 million odd terminals. Which takes me to the next theme of conversation. So we've seen some very good rebound, certain categories coming up instead of others. When it comes to the usual card market, what do you see as the opportunity in terms of increasing the width of this market? So, for example, from retail users taking it into commercial users, or perhaps also the depth of the market to move into deeper markets, to move into markets that are not yet as deeply penetrated with credit cards. So how do you see this playing out? If I can take this to you, Sudipta.
$1 million question, Pravina. And the fact is that, as an industry, we have been wanting to take this out for some time, and take it to the next level for some time. But unfortunately, we have not been always been successful in doing this. One of the reasons is that in terms of credit behavior, sometimes, the credit paradigm in India is slightly indisciplined, especially in certain segments which are new to credit. Having said that, the challenge of the industry is to how to identify within that particular pool of people or untested credit, which are the good pools of credit. It's not that, people are generally indisciplined towards credit, especially people who are not into credit. There are maybe people do not know how to pay. Maybe people do not know how, what is the sort of normal discipline required in sort of unsecured asset credit product, right? So, and it's a learning curve that people go through, right? So I think it's a mix of sort of innovating scoring tools, and we have a lot of scoring tools which are coming across, or scoring insights which are coming across, our telecom scoring insight, our debit card space scoring insight. We are having these new tools which are coming out. We can actually underwrite these thin file customers very, very effectively. And together with it, if there is a bit of a well-rounded assimilation of what a bureau is, what a bureau score is, why credit behavior is important in these people who are untested credit, then we do believe that it will be far more conducive for us to lend at large scale. Let's understand that people who are thin file customers are currently served by or what we call subprime, near prime, or untested customers, right, are being primarily catered to by fintechs or catered to by NBFCs. The large issuers or the large players still try to play in the prime as well as the near prime. And unless the large issuers or the large players start moving into, with a degree of confidence, into subprime or untested credit, the market will really not move, because the others are starved of capital, the others are starved of resources, which the large players have. So it is upon the large players to make the change. However, I do believe that this is a process. This is not a process that will happen overnight. It's a process, in my opinion, that will not take 1 year, but that will take a 5 years to 6 years journey. And once you have enough confidence and once you have enough data to see that this is a segment, this is the loss rates of that segment. So for this segment, this has to be the pricing to give me this amount of return on equity, right? Because finally, all our listed companies, we have to deliver, return on equity to our shareholders. And once those equations are clear, that's when you will see the things moving forward. Who knows? What I'm talking about is a 3-4 year journey might happen within 2 years.
Okay, great. That's really lovely. I think you spoke about scoring insights, new scoring tools. Those are going to be the key differentiators going forward, and I think that's where we see some new plays happening as we speak. So, Girish, taking from the same question, is there an opportunity to broaden the scope, deepen the scope of credit card payments, commercial cards, merchant cards, deeper small tier customers being brought into the card space? And if I may add on, is there an opportunity for the credit card as a tool to play a role in the recovery of the economy that we are talking about, or is that asking too much? Is this not the right tool for that? Could you give us some of your perspectives there?
So, Praveena, 2-3 things. I think you have 3 questions you've asked, and I'll take them one by one. The first part is on the economy part of it. Okay, I think credit card today is one of a very, very critical tool, because not only from a credit lending perspective, but from a payments perspective. Okay, it has earlier credit card, though it starts with credit as a first word. Okay, but end of the day, from a very credit oriented thing, it has now become a payments mechanism, and that to add on to it the affordability part, which is the EMI part, which both Vidya and Sudipto talked about. That has become very, very critical. Okay, so in the month of April, May, if people did not have an instrument, either a credit card or it would have been very difficult even to get basic household goods at your home. Okay, so it has become that part of life from that perspective. So the integralness to the economy is definitely there. On the tier 2, tier 3, actually we started the tier 2, tier 3 journey close to 2-3 years back. Okay? So as a SBI, we realized that we need to go deeper. We have a lot of customers in multiple cities. Okay, 50% of the spends is actually coming now from tier 2 and below. The capacity to spend on the purchasing power was already there. Their needs are also there, and with online coming up, they want to get, now the servicing is also going to happen. Okay, the issue is credit, as Sudipto rightly mentioned, as to what and how you are going to give new to credit customers, what kind of risk you can take, and so what we have realized that even after the moratorium now, when we look at the data, and we have shared this in our analyst meets also, on a ratio basis, actually, the new to credit customer in tier 2, tier 3, tier 4 town is actually behaving is better than a tier 1 town. Okay, so still somehow, because of the whatever cultural reasons, as a country, people still don't. They would want to pay back their debts, and that's if you do the right things. And we are very happy to see that behavior over a period of time. These guys will build their credit scores, and they should be able to get lending from other large institutions also, and other things, because credit card typically in worldwide also is the starting point of building your credit scores for most of the customers, and that is going to happen over a period of time. So that is the tier 2, tier 3 part. The third part which you raised, which is about the merchant business and others, there is a whole lot of scope in digitizing a lot of B2B payments. Okay, even business to government payments, consumer to government payments are already to a large degree work has happened in that. In fact, in this COVID times, we have seen that a lot of corporates which work with us are paying their statutory dues using a corporate card. Okay, so that is the kind of change of used cases that we have seen in the corporates also. So I also believe, as Sudipto said, this is just a beginning. Large economies and developed economies have close to 50% of their overall cash flows in a digitized format, and that to credit and debit. And I'm not even talking about other ways and means in some form and shape, at least consumer part of it. We would hardly be 8, 10, 12% in whichever way you look at it. So there is a whole lot of growth of the economy as well as this part to be captured. So these are just early days.
Oh, that's very good. I think you couldn't have put it more beautifully.
One of my persons I know used to know, and he used to say that if it is a 2020 match, it's only the second over, third ball being played. That's it.
That's right. That's right. And I really like the way you put it, the quiet power that the EMI proposition and credit cards is really giving to the revival of the economy as we see it today is very understated but very powerfully present. So thanks for pulling that up, Girish. So Vidya, when we look at this being able to access new customers, consumer behavior, when it comes to the digitized world, digital onboarding, the whole digital experience. So is that giving the industry access to these markets which are beyond the usual? And if I were to follow that up with another question, are there new customer segments that you're really seeing arise out of this?
Yeah, I think very clearly digitalization as a bank, I think even on the acquiring side, when we step out and when you're starting to digitalize even the merchants and a lot of the businesses which are out there, we are seeing a lot of emergence of new categories even on the acquiring side who want to be digitalized. There is a huge rush of segment of people. On one side, yes, there is growth of UPI and merchants promoting a lot of UPI transactions, which also as a bank is an important form factor for us and we would like to grow it. At the same pace, there are enough merchants and new category of merchants coming out and asking for POS machines, MPOSs. There's a lot of home delivery which is picked up. So they want devices. Consumers are asking for card payments at home. They're asking for SMS-based solutions. So there is a lot of demand we see for new ways to pay. And it cuts across the grocery segment of merchants. It cuts across healthcare and pharmacies. We are seeing that kind of demand for digitalization. And on the issuance side, like we've already discussed, it's through contactless or it is through digital onboarding. Consumers actually coming and demanding a lot more tools than what they've had before. If they had only certain visibility of certain type of transactions on their mobile banking or an app, they want far more amount of information and flexibility and experience to be reached out to them through their own mobile devices. So I think what we clearly saw during COVID is both sides of the clients, the retail consumers and the merchant side of our business coming out and asking for a lot of solutions, which was actually fresh. We've not seen it as much as we saw it during the COVID. Earlier, which used to probably largely deal with NEFT and IMPS transfers, are reaching out asking for credit facilities. So we clearly see pent-up demand in a different form, not just in retail purchases, but wanting to access credit in different forms and digital solutions in different forms. There is a very clear pent-up demand and people reaching out across all these segments. So good times, hopefully.
Thank you, Vidya.
Starting.
That's a So great segue into the last topic that I wanted to cover, which is really around how merchants are driving solutions, how merchants are driving demand, and the rise of fintechs who are coming into the issuance of credit cards, merchants who want to play a leading role in driving the programs around credit cards by way of co-brands. So, Sudipta, can you share your thoughts in terms of how you see this as being a driving factor in the industry? What sort of spaces do you think are emerging? What's the role of the bank here? How does the bank see this and co-innovate, partner, collaborate through this journey?
So, Pravina, we are seeing two broad trends now emerging. One trend is obviously there are a lot of fintechs who are getting into issuance of cards in partnership with banks. Fintechs, and there are a couple of them, and I do believe that this trend will become more prevalent in the coming months. The only thing that I would and the other thing is that merchants are looking at newer solutions and demanding newer solutions from banks, especially both on the acquiring side as well as merchants, large merchants wanting their own card programs. Right, for example, our program with Amazon, successful Flipkart, HDFC's program, and say SBI cards program with Paytm, right? Which I can take 4 examples of these are large scale volume merchants. But now the question is that if the customer banks with us, if the customer has an account with us, if the customer has a personal loan with us, if the customer has a credit card with us, do I as a bank own the customer, or because the same customer is using a platform like Amazon or Flipkart or Paytm or maybe Zomato or Swiggy or whatever, who owns the customer? The answer is somewhere in between. It is a shared ownership, and the fact is that though the financial footprint might be very, very strong on the financial institution side, the behavioral footprint or the consumption footprint is very, very strong on the merchant side. Right now, the question is that the problem where it comes is the problem in economics. Some of the e-commerce economics or some of the behavioral economics on the e-commerce side are slightly anemic. Or frankly, because of extreme competition, some of the economics of those behavioral models have become weaker, whereas the economics on the financial services side still remain very, very strong. So it is a natural tendency of the players who are finding or trying to balance their economics to try and come and take some amount of the economics which is available with the financial services side and move it to their side. So this is a sort of a balancing or a push and pull which is continuing. Now the question comes here is that if you have an entity which is coming and trying to take revenue share with you, right? Do you collaborate with the entity or do you compete with the entity?
Very nice. You practically, crystal gazed out there. And I remember the last conversation we had about a year back, Sudipta, when you spoke about the NTB network, tech, and banks and the role each plays in this go forward journey. So it's an interesting journey, and I think here tech/merchant kind of in that same space, right? So great. And Girish, I'm going to hand over the finishing comments to you. So. Question on the fintech merchant-led propositions, co-brand space. So if you can, expand your perspective on that and close the discussion for us, that'll be great.
So Sudipta has very lucidly put the merchant fintech. If he's if the merchant himself is a fintech or a Amazon like a player or e-commerce players and the kind of challenges which are there. I think. There is a bit of realism in the way banks or way we operate. There is a whole lot of optimism in which the fintechs and some of these e-commerce guys operate. So somewhere actually we become more optimistic along with these. A lot of new fintechs which are coming, which also are operating into some specific areas of core, where the core credit card businesses are. And they are also rethinking, rechanging, reworking the way that some of these things operate. Idea is to collaborate with them and to learn from them and then incorporate them into our own business models so that we become more efficient along with them. On some of these co-brands, these partnerships are a great idea. I think for acquiring, not only for acquiring new customers, because for us, for SBI, the bank itself has a base of more than 400 million customers. So it's a fairly large base with 280 to 90 million debit cards. And so this is also important for new credit models because you start to get differential data from the partners. And that is the way that the new to credit, which Sudipta and I was mentioning earlier, can be brought into the proper mainstream, because these people have started using some of these things. They are showing their behavior. It is up to us as industry to how do you use those data, alternate data from these players as partners, and start creating models where we can bring them more and more customers into the mainstream credit segments. Okay, so that is a very, we find that as a more important variable into the picture, where when we look at partnerships from that perspective. And yes, customer has to be shared, and that battle will continue.
Thank you, Girish. And we've got a really good proposition with HDFC with the IOCL card on RuPay, the Shaurya card with SBI cards, and of course, really so happy with the great progress we are seeing on the IRCTC co-brand. So, from a RuPay standpoint, I think this is a space we are very excited in, and working with all of you in many facets there. So thank you so much. Thanks for joining us, and look forward to many more such interactions. Thank you. Thanks, Aditya, Vidya, and Girish.
And that brings us to the end of today's session of the ET India Inc. Boardroom, brought to you in partnership with Transaction Next, powered by NPCI. If you missed any of today's sessions, or you'd like to watch any of the other sessions at your own leisure, log on to etboardroom.com. We'll see you tomorrow, same time, same place. Till then, goodbye.